It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all holding on to gains, but we are well off session highs on the S&P. At one point, we had the S&P up as much as 3.4%. Right now, we're looking at a gain of 1.4%, up 73, 53.61. The Dow up 372, up 0.9%, while NASDAQ, the composite index, up 369, up 2.3%. The NASDAQ 100 index up now by 2%. Stocks did get an initial move higher on media reports that the U.S. is considering lower levies for China, though the gauge paired gains after Treasury Secretary Scott Bessent said the president has not offered to take down tariffs on a unilateral basis. 10-year, 4.36%. The 2-year, 3.83%. Gold now down $87 the ounce. That's a slump of 2.6%. $32.93 on gold. West Texas Intermediate crude oil back at $61.76, down now by 3%. Bitcoin up 2%, just above $93,000. After earnings, Boeing shares are now advancing by 5.2%. After earnings, AT&T up 0.6%. Yesterday, you recall, Verizon reported earnings down 2%, and T-Mobile reports tomorrow. T-Mobile U.S. up now by 0.1%. So again, recapping, stocks are higher, but the key takeaway at this are well off session highs. S&P right now up 1.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And back we go to Washington once again. Here he is, your host, Joe Matthew.
All right, Charlie, we thank you, sir. We'll be back to Charlie Pellet shortly, the voice of Wall Street, and incidentally, the New York subway. Watching stocks rise today, including Tesla. Charlie's been checking Tesla for a couple of reasons here, and it brings us back to the late edition of Balance of Power, right after the bell yesterday. Worst quarter in years was the headline. But look at the stock, up 6%, $14, back above 250, because it looks like they're going to get Elon back. Yeah, that's the story that we're following here in Washington. Of course, we've talked so much about his work at the Doge, with another headline, Musk to refocus on Tesla after its worst quarter in years. And you know, we've been looking at the end of May here, if you listen to this program, remembering, of course, that that's the deal, 130-day limit. I guess unless they re-up this deal, his role as a special government employee, that would kind of round things out by the end of May. My only real question is, does he get to keep the chainsaw? Elon Musk did speak to investors on the quarterly conference call following the results last evening. Listen.
Starting probably in next month, May, my time allocation to Doge will drop significantly. I'll have to continue doing it for, I think, probably the remainder of the president's term, just to make sure that the waste and fraud that we stop does not come roaring back.
He called his work at the Doge, quote, mostly done, unquote, raising a whole new load of questions here inside the Beltway about what exactly the Doge has accomplished. Elon Musk promising in the outset to cut $2 trillion in spending, waste, fraud, and abuse. And it might not come anywhere near that number, although we're going to be talking a lot more about rescissions when lawmakers get back to town, and you can park that here for a moment. It's not very often I get to spend time with Ed Ludlow. It's usually a big deal involving a rocket launch, so that should tell you how important this story is today. He's with us from our bureau in San Francisco, of course, the co-host of Bloomberg Technology, our Elon Whisperer at the moment. Ed, it's great to see you, and I appreciate this. This is really what investors were looking for. Does Elon Musk mean it? Is he going to be showing up at the Tesla plant? What's his new life going to be like, the one he used to lead?
I mean, that's a pretty good summary. It was the only metric that mattered. You know, we asked going into the earnings print, how do you gauge someone's commitment to something? And he opened the call saying exactly that. As of next month, May, he will drop the amount of time that he spends with Doge and boost the allocation of time for Tesla. But you make a really good point, which is, depending on who you ask, this was or wasn't a surprise, right? We've known for quite a long time that a special government employee has a 130-day limit on their contributions, even if they're unpaid. And we've all been looking at the calendar and thinking what happens at the end of May. But it's just sort of the public coming out and saying, don't worry, I'm coming back to Tesla and I'm focused on the big picture stuff.
Fascinating. What happened to the company in this quarter, Ed, and how much did politics have to do with it?
Yeah, there's a lot of politics to discuss. I mean, there were contradictions between the statements that Elon Musk made on the earnings call and the statements made by his CFO. The CFO quite clearly addressed the issue that in the first quarter, there is what he referred to as brand damage and vandalism that impacted first quarter sales. Elon Musk opened his remarks just before he kind of announced he would step back from Doge, saying he recognized a backlash. So, and what's interesting is that there's more than just about the United States here. You know, there's a lot of evidence that we have protests in the United States. Elon Musk made unsubstantiated claims that they were sort of a targeted and paid-for campaign against him, and that has impacted Tesla's sales. But the politics extends to China, right, where Tesla is under pressure from domestic players in China. And if you're a Chinese national, would you buy a Tesla or champion your own domestic brand right now, knowing that Elon Musk is an associate of President Trump in this trade scenario?
Mm-hmm. You know, you see polls, Ed, you've been in business news long enough. You see polls, right, what brand association people have, whether they're from the left or the right. They've got their own beer, they've got their own car. In this case, they've really got their own car. But to watch that transition from being a darling on the left, right, with making the most successful EV ever made in this country, to the complete political opposite, makes you wonder how much permanent damage is done here.
Yeah, and it's hard to quantify. I mean, within the data, there is also a debate about whether the softness in the first quarter reflected Americans who were existing Tesla owners and had become disgruntled or disenfranchised with Elon Musk, or whether Elon Musk's profile and relationship with government was holding off first-time buyers of a Tesla product. We just don't know. But it's an excellent question. I think what was also so interesting is just the tariffs debate. You know, Elon Musk is closely aligned with the president, as you know. Right. But he did say, I don't believe in high levels of tariffs. I believe in low tariffs. And I advocated that position to the president, but it's not up to me. It's up to the president. And in the context of an earnings call, that was not unprecedented, but a little bit surprising, right? It's something that doesn't happen in the daily course of my job. Yeah.
No, that was fascinating, and I wonder, Ed, if that was the breaking point. I'm not sure we'll ever know. But was it the political tug to have to get back to, and of course the investor tug to get back to the company, to get the stock moving again, to have a better story to tell at Tesla? Or was it, hey, you know what? I don't believe in tariffs, so I think maybe our work here is done.
In any company, it's not just the CEO, right? And in any company earnings, the literal statement, the report, and the call, the IR team is involved, the legal team is involved, and the CFO is involved. And it said very clearly in the earnings deck that the company recognizes a changing political landscape without defining geographically where it recognized it, and an evolving trade policy. And they're all impacted by that. And it was a big moment where, you know, we know about the disagreements within the cabinet, Musk and Peter Navarro not necessarily getting on, but this was a company in regulatory filings recognizing what's happening around the world right now. And while Tesla is more insulated than other American companies because it has a very onshored, vertically integrated supply chain, it basically said, like, this isn't good for us, and our opinion on it is this. And that was an important moment. It was an indirect message to this administration. I think that's a fair interpretation.
Tell me about the man, Ed, before I ask you about some other stuff that I wanted to talk to you about. Much has been said about Elon Musk's lifestyle, and there have been a lot of questions about the stress levels he's been under. He talked about how difficult it's been trying to do all of this. There have been questions about his sobriety. There have been questions about, my gosh, this piece about all the kids and the mothers that he's dealing with. Is he well?
Elon Musk has the lifestyle of someone that is atypical for the everyday person. He is on and off the world's richest person. You know, that's an understatement. Look, I know a lot of people that have worked for and with Elon Musk across all of his companies for a really long time. He is a micromanager. He likes to make decisions. He likes to be told, tell me why I am wrong. He spends a lot of time on private jets, working off of his cell phone. But the story has been, has he been too focused on Doge and been operating in Mar-a-Lago and DC too much relative to Tesla's facilities? But he's also credited with some of the biggest technological breakthroughs that humankind's seen in the domain of energy, EVs, rocketry. I think that this whole debate was about that. He's good at that stuff. So if he focused more on it, then there might be progress in those fields. And it's also important to reflect that lots of times Elon Musk makes bold predictions and timelines that he gets the timing wrong, but he does often get there in the end with a product or whatever.
Isn't that right? Fascinating story. As we got our hooks into Ed Ludlow, I need to ask you about Intel. It's an important headline.
Yeah.
Plans this week to cut over 20% of its staff. I'm sitting in Washington. You're in San Francisco. So the question I'm supposed to ask you is, did the Biden administration pick the wrong company?
Yeah, you'd think that Intel would be the national champion, right? It is both a designer of semiconductor products and a manufacturer of them, a domestic manufacturer. And Intel's been very frustrated with the CHIPS Act because the money has not really been forthcoming. The intended impact of it's not yet happened. What we're reporting is that they're cutting 20%, but it's not just about bloat. It's about kind of getting focused on technology. There are lots of middle managers at Intel that are involved in making decisions that mean good decisions don't happen. And Intel is trying to find a way to kind of get back to their heritage, which is being the leader in the field of semiconductor manufacturing at the cutting edge of technology. What they want to do is very much in line with what the Trump administration wants to do with onshoring manufacturing. And so I'm so curious to hear when they report numbers. Has anyone from the administration phoned them? Or if they phoned the administration, that would be a big piece of news.
Absolutely fascinating. And more broadly, when you consider the semiconductor space, Ed, how would you describe this industry right now? Obviously, we're in flux. We're dealing with export controls.
Yes.
We've seen an enormous amount of damage here to NVIDIA shares, for instance, over the past couple of weeks, despite a great meeting between Jensen Huang and Donald Trump. But we're drawing a line around Taiwan here and trying to figure out how quickly they can pull this off.
It's the $100 billion question. We don't have enough time for me to answer it in full. But basically, there are American chip companies that all design chips that are right now in vogue. We are talking about GPUs or accelerators that go into data centers to train AI models. Intel's fallen behind in that space. NVIDIA largely has a monopoly. The key point about a company like NVIDIA is it's what's called a fabless chip company. It designs the chips, someone else makes them, as you just said, TSMC. The supply chain, therefore, has the critical part, the manufacturing of the chip, in Taiwan. That is not China, but of course, in the context of renegotiating the world order for trade, it's an important factor. China's also a critically important end market for all of these names, be they smartphone chip makers, be they in the data center business. And what they want to find out is, if I make a chip somewhere in the world outside the United States, is there a business for me in China? And we don't have an answer to that yet. I saw the headlines from Besant today. It doesn't answer the question of what happens next in that sector specifically.
It sure doesn't. So we got to keep talking about it. Ed Ludlow, a journalist and a broadcaster, peaking right now. Ed, come on more often and talk to us. He co-hosts Bloomberg Technology. He does have a full-time job, but we'll try to pull him into this conversation as often as we can. Really interesting stuff. This is, again, the intersection, once again, of Wall Street, Washington, and, in the case of Ed Ludlow, San Francisco, the technology sector. You can't pull one leg out of the stool. Ed, thank you. We'll assemble our panel next. Rick Davis and Jeannie Shanzano on the way in as the markets rally. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. Stocks are higher, but Wall Street's jubilation that President Trump is dialing down his combative agenda is being dealt a reality check after Treasury Secretary Scott Bessent cast doubts on a timely resolution to the U.S.-China trade war. Right now, we have got the S&P 500 index up by 1.95%, have been higher by as much as 3.4%. Right now, the S&P up 102 points at 5390. The Dow up 563, up 1.4%. The Nasdaq Composite Index up 465, up by 2.9%. The 10-year yield 4.36%, with a 2-year 3.83%. Spot gold is retreating by $82 the ounce to $32.98, down 2.4%. West Texas Intermediate crude down 2.1%, $62.35 a barrel. And Bitcoin up 2.6%, 93,540 on Bitcoin. News about the economy and new home sales advanced in March, even as the overall economic outlook dimmed. And with that story, here's Bloomberg's Vinny Del Giudice.
Dipping mortgage rates fueled a 7.4% increase in sales of single-family homes. The median sales price also dipped. The Commerce Department data show the South led the gain in new home sales. The Midwest also improved. Last month's strong showing could be tough to beat in the months ahead. A report from research firm S&P Global says overall American business activity expanded this month at the slowest pace since 2023. Vinny Del Giudice, Bloomberg Radio.
And among home builders, they're all higher. Toll Brothers up 1.7%. Lennar shares, they're up 1.2%. KB Home up by 0.7%. Ed Ludlow just talking about Tesla. After earnings, Tesla shares up by 6.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And back we go to Washington. Once again, your host, here's Joe Matthew.
Okay, Charlie, thank you so much. Watching Wall Street for us as we talk politics here in Washington. We'll have a lot more on the markets, by the way, coming up top of the hour, 1 p.m. Eastern time, our conversation with Alonzo Munoz, Chief Investment Officer at Hamilton Capital Partners, as this market again takes a deep breath here. Another cleansing breath as the White House changes course on a couple of pretty significant issues. We're talking tariffs and we're talking about the Fed chair. The tariffs, even at this time yesterday, people were feeling better after Scott Bessent suggested the standoff couldn't last. Unsustainable, must de-escalate. President Trump added to that quite a bit, suggesting that tariffs could be significantly lower, specifically on China, as talks continue. And then the matter of Jay Powell came up. Reporters were in the Oval Office. He was there actually to swear in the new chair of the SEC. You know where the conversation was going to go after Donald Trump threatened to fire the Fed chair a couple days in a row. Not sounding so much like that now. Listen to the president.
No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
Why? Did you hear something? It was only 48 hours earlier. Actually, 24 hours earlier. Donald Trump posted on Truth Social. There could be a slowing of the economy, he wrote, unless Mr. Too Late, a major loser, lowers interest rates now. He went on to write, Powell has always been too late, except when it came to the election period, when he lowered in order to help sleepy Joe Biden. Later, Kamala get elected. How did that work out? Remember, he said he could not be terminated soon enough. And now there's a whole round of reporting about how Scott Bessent and Howard Lutnick walked this one into the Oval Office and pulled the president back from his desire to fire the chair of the Fed, the very man he appointed. And so we're traveling in reverse here when it comes to the messaging and moving higher on Wall Street with our panel in place. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us right now. Jeannie is, of course, Democratic analyst and political science professor at Iona University. Rick, our Republican strategist and partner at Stone Court Capital. So, Jeannie, the headline today is never mind.
That's right. And Joe, I'm trying to be positive on a Wednesday. So I'm going to say there's good news here. Number one is that for the first time, we are seeing that the Trump administration in at least Trump 2.0 is responding to the market. So that is a good thing. And it shows really, to your point, how hungry the market is for some good news, even if it's just little tidbits like this. You know, on the negative side, the reality is we are in a situation where the markets are hoping, number one, that Donald Trump doesn't pursue his policies, and number two, that he doesn't mean what he says. So when he says would be great to get rid of Jerome Powell, you know, all of these things, they're praying that he doesn't mean it. So that's a situation we're in, and that is not a very good place for a country to find itself. But it is a little bit of bright light from what's been a pretty tough month through the markets.
Yeah. Well, boy, I guess that's for sure. Rick, these are all market-moving comments, whether it's the president or the Treasury Secretary that we're hearing from. Earlier today, Scott Bessent said, yes, America first, but that does not mean America alone. Is that the difference in the messaging here that's soothing the market?
Yeah, I think that what we're seeing is Trump's reaction not to the markets, but to his advisors and to, you know, the corporations that came in on Monday, Walmart, you know, and a few others, talking about empty shelves. And because we've seen the markets gyrate wildly in the 100 days that he's been president, and he hasn't really seemingly cared. But I think when they walk into the Oval Office and they say, hey, look, we've got a problem, boss, he sits up and listens. And so I think that a lot of this isolationism discussion has been a little overwrought. I think, you know, Secretary Bessent's effort to try and rationalize it a little bit was probably a good investment of time today, you know, during the IMF meetings, World Bank meetings, because we are active with multilateral institutions. We're negotiating with the European Union. We're not isolating European countries one by one, which you could have imagined would happen. You know, Trump has, you know, formulated efforts to try and be supportive of these lending institutions that Bessent's speaking to. So the reality is, and there are all kinds of engagements around the world around, you know, negotiations with the Iranians on nuclear weapons, negotiations with the Russians and the Ukrainians on stopping the war. Look, I mean, it isn't what you would expect out of a Republican president, but in this case, it is more than you would have expected from Donald Trump, the isolationist.
Pretty amazing stuff here. Jeannie, what's your thought? Do we have Target to thank then or Scott Bessent? Because Rick is right. Walmart, Target, Home Depot, sitting in the Oval Office saying not only are prices going to go up, but you're going to see empty shelves if you continue. That's the imagery that changed Donald Trump's mind, isn't it?
Well, I can't read what changed his mind. He did have those meetings with those big box CEOs. He, seems to be listening a bit to Scott Bessent. But I think the real question here, number one, what is the long-term impact of this policy of protectionism he has been pursuing? And number two, and most importantly, what is the world to think, and what are we as Americans to think about a president and a White House who seem to be the gang that can't shoot straight? On the one hand, he says one thing one day, one thing the next day, and it raises real questions about competence. So I don't know if it much matters if he's listening to CEO Scott Bessent or the market. He did pull back what he had said a few hours earlier yesterday, and the markets responded positively. But this is no way to run the global economy or the U.S. economy on these kinds of whims. And, for everybody who feels confident that his attacks on Powell are, a thing of the past, he seems to flip like the wind these days. So I'm not so sure that next week when the Fed has his meeting, he's not going to go back on the attack. Doesn't mean he's going to fire him, but right. The attack can come.
We'll be watching Truth Social, of course. I just wonder, when we consider the deal-making aspect of all of this, what the message is to China. Let's go back to the Oval Office last evening and hear Donald Trump on tariffs for Beijing. Listen.
I'm not going to say, I'm going to play hardball with China. I'm going to play hardball with you, President Xi. No. We're going to be very nice. They're going to be very nice, and we'll see what happens. But ultimately, they have to make a deal, because otherwise they're not going to be able to deal in the United States. So we want them involved.
Okay, so we're not going to play hardball, Rick Davis. What is the message there to President Xi? We're going to be very nice. Is that the way to set up a meeting?
Yeah, first of all, 145% tariff is hardball. I don't know. That may be a dictionary definition of hardball. It is an embargo against Chinese goods into the United States, once our largest trading partner. So whether or not you're calling them names is one thing, but like when you shut off trade to a country like China that is solely dependent upon it for their economy, it's playing hardball. So it's confusing because we have so many connecting priorities. Everything from military and issues related to Taiwan in the Indo-Pacific to our trade relationships. It impacts everything like climate. China and the U.S. has to find a way to get along. Otherwise, there's conflict. There's conflict economically and militarily, and that is bad for the world. If China gets a cold, we start showing symptoms and vice versa. So this is good news that Donald Trump is seemingly open for business when it comes to negotiating a trade deal with China that's different than the current one. The question I have is, what's China thinking? Because they got to be sitting there in Beijing going, what the heck is going on here?
That's exactly
one
right.
minute he's waiting for our call. We don't call. She goes around, starts meeting with the Vietnamese and other friends and allies of the United States. And all of a sudden, Donald Trump's tune changes. So, I'm glad it's where it is. And, partly concerned like Jeannie is about what the future brings, because if we're running hot first, cold second, hot first, cold second, it's a new definition of good cop, bad cop, because you're the same person.
I think there's a word for that. Well, I'll tell you what. If it takes 2 years, like Scott Besson said, or 3 to come to an important trade deal with China, we do know one lawmaker who will not be here for it. Pretty important news today, Jeannie. The senator from Illinois is leaving the building. This is Dick Durbin from social media a short time ago.
The decision of whether to run for re-election has not been easy. I truly love the job of being United States Senator, but in my heart, I know it's time to pass the torch. So I'm announcing today that I will not be seeking re-election at the end of my term. The people of Illinois have honored me with this responsibility longer than anyone elected to the Senate in our state's history. I'm truly grateful.
All right. Look, maybe not surprised. We've been waiting on this one, but we're talking about the second-ranking Democrat in the United States Senate, Jeannie, a lion, the Democratic Party. Does this say more about Dick Durbin's age or the state of politics in Washington?
44 years is a long time for any of us to be in one job. He's the 5th senator over 65 to retire this term. As you mentioned, not a surprise. I do think it speaks to this recognition we've been seeing on the Democratic side and the Republican side, but the Democratic side, that you do need to make sure you bring up the people who are coming behind you. And there's a lot of good Democrats in the Illinois contingent, on the Democratic side who have expressed interest in running if he was to step aside, including a very popular lieutenant governor. So I do think he knew it was time. I gotta say, Joe, I love the music behind that video. But, he has served, very admirably. And I think he sort of paves a way of saying, I'm going to go while I am in a good position, and leaving behind a seat that can be filled by Democrats, they hope.
Mm-hmm. Rick, we've only got about a minute left. You worked with and around Dick Durbin in the United States Senate in your time with Senator John McCain. This stays Democrat, right? This isn't a threat to the seat count for Democrats in the Senate?
They're going to have to spend money. Some of their candidates, Rahm Emanuel, others are lining up. They're going to have a good candidate that comes out of that primary. But remember, Mark Kurt was the last Republican that got elected to the Senate in Illinois. And so it's not a miracle. Yet I would say likely a bad year for Republicans. So I would think the seat probably stays the same. But Durbin was a class act, worked well with John McCain and other Republicans, was bipartisan, and yet knew how to throw a punch.
Well, that's right. We've always enjoyed our conversations with him here on Balance of Power. I hope we'll have more opportunities as we tick through the next couple of months. Rick Davis and Jeannie Shanzana will be back in our second hour with a lot more to talk about here live from Washington. We've got our eyes on Wall Street as well, and we'll update the markets ahead right here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Wall Street sees across the valley of tariffs. Welcome to the Wednesday edition of Balance of Power as stocks rally on a reversal from the White House on China tariffs. I'm Joe Matthew alongside Kaylee Lines in Washington. Thanks for being with us here, Kaylee. The president also reversing his position, as we learned late yesterday, on firing the chair of the Federal Reserve, helping investors breathe a little easier today on both fronts.
Yeah, sure, except the president might suggest it was not a reversal of position because it was never his position to fire the Fed chairman in the first place. He said to reporters in the Oval Office last night that he had no intention of ever firing Powell, and that he never did. Of course, he had previously said his termination couldn't come fast enough.
That's right.
As recently as days ago, but certainly that is helping to fuel a little bit more confidence, it seems, in both stock and bond markets. So notably, we are well off the highs of the session on both, as investors still have to consider how long there is to go in terms of progress on the U.S.-China trade front, even if they're signaling some more flexibility.
That's right. We heard from Scott Bessent again today. Around this time yesterday, we were discussing his remarks on China in a closed-door meeting that put a lift underneath this market, the idea being that the standoff can't last forever, de-escalation in the offing. But then, Kayleigh, he also said a deal could be 2 or 3 years away. And by the way, negotiations haven't started yet.
Yeah, still no one has picked up the phone. It's important to keep that in mind, although negotiations have started with other trading partners like India, for example. The Treasury Secretary suggesting they're close to some kind of an agreement with that country in particular, though it does seem that these agreements might be more just a decision to keep talking than any kind of comprehensive trade framework, knowing that it is a very short window of time they're working with here.
You add a little bit of news from Elon Musk heading back to Tesla, at least to winding things down a bit here in Washington. It does seem to be a little bit more optimism on Wall Street, but to your point, we have seen better numbers today.
Well, we certainly have, so let's get a check on those now. Charlie Pellet, as always, joining us from New York with a look at the markets. Hey, Charlie.
Hi, thank you very much, and here's what's going on. Tesla, tariffs, and Powell, all about de-escalation and relief today with the Dow, the S&P, NASDAQ, a solid advance, but as you both point out, we are well off session highs at the best level of the day. We had the S&P up 3.4%. Right now, looking at a gain of 105 points on the S&P, up by 2%. The Dow up 580, up 1.5%, while NASDAQ is up 485. The NASDAQ Composite Index up by 3%. Our Romaine Bostic will have a whole lot more on today's market moves coming up in just a moment. 10-year, 4.36%, with the 2-year, 3.84%. Gold down $81 the ounce, giving back 2.4%, but still just below $3,300 the ounce on gold. West Texas Intermediate crude down 2.5%, 62.07 a barrel. And Bitcoin, a move there of 2.8%. Bitcoin closing back in on the $94,000 level. Right now, we got Bitcoin 93,740. Earnings news: Tesla shares are higher, up by 7.5%. Elon Musk vowing to pull back significantly from his work with the U.S. government and put more focus on Tesla. That is easing investor concerns about the car maker's worst quarter in years. Again, worth repeating, Tesla shares, they're gaining now by 7.5%. Repeating, stocks higher, S&P up 110 now, up by 2.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And back we go to Washington. Once again, your hosts, here they are, Joe Matthew and Kayleigh Lyons.
All right, Charlie Pellet, thank you very much indeed with a check on the markets from New York. Meantime, here in Washington, we certainly have been busy, and it's a busier week than usual here in the D.C. area, as, of course, it is also the meetings of the IMF and World Bank, in which trade, no surprise, has largely dominated the conversation thus far. And on the sidelines of these meetings, there was an event with the Institute of International Finance today in which we heard actually publicly on the record from the Treasury Secretary Scott Bessent after his closed-door remarks to investors at a separate J.P. Morgan event yesterday, in which he talked about the unsustainability of the current tariff regime the U.S. and China have placed on each other. And his message today, when speaking in front of a microphone, was a suggestion that for all of the concern around isolationism and protectionism on the part of the U.S., that the U.S. is not intending to go it alone without multilateral institutions here.
I wish to be clear. America first does not mean America alone. To the contrary, it is a call for deeper collaboration and mutual respect among trade partners. Far from stepping back, America First seeks to expand U.S. leadership in international institutions like the IMF and the World Bank. By embracing a stronger leadership role, America First seeks to restore fairness to the international economic system.
Let's bring in Bloomberg's Dan Flatley covering the Treasury for us here in Washington. Dan, it's great to see you. You look at the market today, you consider where we were a couple of days ago when Donald Trump was talking about firing the Fed chair. and this is a different world. Is this Scott Bessent's market now instead of Donald Trump's market?
Yeah, I mean, it's a good way to think of it, Joe. Lots of things have been moving around the last few days in Washington, D.C. We've done some reporting on Secretary Bessent's remarks at this J.P. Morgan event that you mentioned, Kaylee. And it does seem like the administration is striking a much different tone. What accounts for that? Was it a reaction to the market turmoil that we've seen over the last couple of weeks? Is there some grand strategy at play? Is there something else going on? These are all open questions, but it certainly seems like the market is reacting well to Secretary Bessent's comments yesterday, what we heard from Trump yesterday afternoon, and again today, what we've been hearing out of the administration. So it's interesting.
Yeah, one of the things we heard from Trump yesterday afternoon was that he does expect there to be a deal with China, that tariffs will ultimately be below 145% when that happens, that there's been some reporting today that suggests the administration might be looking to lower China tariffs preemptively in order to get them to the table to de-escalate the situation. What was Bessent's message on China specifically today?
Yeah, it's a great question. So after the speech, we had a chance to kind of talk to Bessent, not one-on-one, but a group of reporters, ask him some questions, and he was pressed on this idea of the U.S. unilaterally or on its own starting to reduce some of the tariffs on Chinese goods. And he said, I think the direct quote was, not at all. The president is not thinking about that at all. But, at the same time, obviously the signaling is there that the U.S. is ready to negotiate. I mean, this is totally different from where we were just 3 weeks ago when this was like maximum leverage, maximum tariffs, and this escalated to, as you mentioned, U.S. Tariffs of 145% on Chinese goods by the U.S. and 125% by China on U.S. goods. So, I think the message was basically we're trying to rebalance trade. We want more manufacturing in the U.S. We want less consumption. We want China to consume more, including some of our goods. And so Bessent is really kind of pitching this as more of a rebalancing rather than a tariff wall, as we heard the president talk about before. So it's a little confusing, to put it mildly. But it seems like the general direction of travel is toward a more moderated kind of posture on trade. So we'll see.
All right, Dan Flatley covering the Treasury for us here at Bloomberg. Thank you so much. And Joe, it is one thing to consider the direction of travel.
Yeah.
It's another thing to consider the speed of travel. As the Treasury Secretary is signaling that a comprehensive deal with China could take literally years, 2 to 3 years, I believe was his
the balance
suggestion.
Of this term.
Right.
And we haven't seen the 90 deals in 90 days that Peter Navarro has talked about. So there is a question as to whether we're about to see a flurry of deals. Maybe it's a framework, to your point, agreements to keep meeting and negotiating. But that's a far cry from a new world order, an economic world order that we were talking about, moving textiles and button factories back here to the U.S., screwing iPhones together. We're not hearing talk like that now.
But is talk of just simply de-escalating and continuing talks enough for financial markets, risk assets particularly, as we are seeing a rally underway, though, as we've mentioned, well off the highs of the session. We want to check in now with Romaine Bostick in New York, who, of course, is co-host of Bloomberg The Close. Romaine, when we look at the markets today, and I'm looking at moves at more than 2% on the S&P 500 and the NASDAQ 100 a month ago, this would have been absolutely nothing to sneeze at, but obviously it's not quite the rally we were seeing earlier.
Well, it's kind of interesting, too, the complexion of the rally. I mean, you talk about a 2% gain today, Kaylee. We had a 2% gain yesterday for the major markets. So if we hold this line today, this will be the first time we've actually had 2 days back-to-back of 2% moves higher in the S&P 500 since at least late 2022. And you've been talking about the sort of tinge of optimism, if you will, on the back of those comments that Bessent made first yesterday behind closed doors and today out in the open. Some, I guess, modicum of ratification coming from Trump himself on his social media posts. And that is enough to sort of light a fire. But there's 2 big asterisks there, Kaylee. One is short interest is incredibly high. And I did make some calls this morning because I was curious as to how much conviction there was behind this rally. And a lot of people pointed to the rally that we had about a week and a half ago, where it was more of a short squeeze rather than wholesale buying hand over fist. So it'll be interesting to see what the price action looks like as we get closer to the 4 p.m. close. And more importantly, Kaylee, as you know, what tomorrow looks like, because we know all of this could sort of turn around on a dime based on comments that the president or one of his surrogates makes.
Yeah. Well, I'm glad you went there, Romaine, because I wanted to talk about that very issue. When it comes to conviction, we've seen much stronger numbers today. And of course, I'm assuming you're the one reading the analyst notes, that there's going to be a feeling that if investors have the opportunity, they're going to sell into strength after some of the hellish sessions that we've seen over the past couple of weeks. Is that where we are this afternoon?
To a certain extent. I mean, I'm going to give you sort of the economists on the one hand, on the other. On the one hand, there are some people that are sort of looking at the rhetoric coming out of the White House and saying this does appear to at least be a minor de-escalation of things. Not that the tariffs are going away or this trade war isn't going to happen, but that it might not be as severe as priced into this market. On the other hand, you have a lot of folks that are still looking at economic conditions and saying there's trouble out there. We had PMI data this morning that showed business activity continues to decline, consumer confidence data that continues to show consumers not confident in this economy. And there's a great story in the Bloomberg terminal today, Joe, about CEOs and the number of mentions on conference calls of positive comments versus negative comments. And that ratio, as you can imagine, skewing much more to the negative right now. And I just want to make one quick point, too. You were talking about moving manufacturing back and the time it would take to strike a China deal.
Yeah.
We have to remember, this is the 100-day mark for this administration is like next week. So we're just 3 months into this, and a lot isn't even set in stone. So how do these companies, and more importantly, how do investors react when, as you point out, Joe, this is going to be a long process, even if deals are indeed struck?
He co-anchors our essential program, The Close, but has become inextricably part of Balance of Power these last couple of weeks. Romaine, it's great to have you. Romaine Bostic, watching Wall Street for us as we add the voice of Alonzo Munoz, Chief Investment Officer, founding partner at Hamilton Capital Partners. Alonzo, welcome back to Bloomberg TV and Radio. It was all doom and gloom last time you were on with us here when we were talking about reciprocal tariffs, odds of a recession rising. Where are you on this level of optimism today? Are you a buyer on what you're hearing from Washington?
Hey, Joe, it's good to see you. Good to talk to you guys again. So we have a little bit of whiplash. I mean, I think Romaine made some good points earlier that the sentiment is really, really negative, not only at the consumer level, but also at the business owner level and the executive level. So this is an interesting market. The seatbelt sign is on, and we're going to continue to wait and see how some of the hard and soft data starts to come in over the next couple of weeks. And really looking forward to that Fed meeting May 7th to see what the Fed does. I think the posturing that they've taken over the last couple of days is that they're not going to budge, even against a president that has been, on the attack against Jerome Powell. So, we're looking out at the next couple of quarters, I think, for long-term investors, and most of our investors are. This is a good opportunity to plant a flag in the sand during this volatility. But a lot of whiplash. I mean, at any moment, this market could turn, and we're watching that very closely.
Well, where do you want to plant said flag then, Alonzo, given all of the volatility, given the uncertainty, given the wide swath of industries that may find themselves vulnerable to whatever tariff regime it is that we ultimately end up with, let alone the uncertainty that the consumer may feel as a result? Where are the safe places to be?
Well, it's been a tough market, Kaylee. I mean, everyone has rushed to cash and to gold, and that's done really well in this market. But as we peel back the layers and look underneath the surface in this market, you have great names in technology, you have great names in financial. I mean, you have a lot of sectors that have sold off, not only here in the U.S., but across the globe significantly, given all of the uncertainty. And so there's opportunities to be tactical, to be strategic, and maybe start to take some of that cash off the sidelines. But buyer beware, as we've talked about for weeks, that this market can turn very, very quickly. And as we go into next week and look at Mag 7 earnings, I know we got Tesla yesterday, we'll get Google tomorrow. We're all going to be looking forward to seeing how these companies are going to deliver against an economic backdrop that potentially could continue to show some weakness as we go into the next couple of months.
Interesting. When you consider export controls, when you consider antitrust as the backdrop for the Mag 7 going into this next quarter, are you a buyer knowing that they're sitting on an historic pile of cash? Or are you leaning more towards an S&P equal weight to try to balance things out, not really knowing who's next?
Well, Joe, we're a little bit biased. We've owned tech for a long time, and so we're going to continue to be buyers on this dips. But again, the buyer beware sign is up because at any moment, things could change. And I think that's the difficulty in this market, where on one day there's optimism, on the next there's extreme pessimism. But as we look back at the last couple of weeks, I mean, the sentiment has been really, really negative across all indicators. And for us, that's been a little bit of a contrarian indicator that it's not the end. We are going to get through this. We're seeing a little bit of progress, and the comments from Treasury Secretary have been, I think, in line with expectations that hopefully they have deals on the tables, and that's the risk as we run up over the next 30 to 60 days that we need to see deals. We need to see trade deals on the table for this market to really expand as we go into the summer.
Okay, so we've covered the comments from Treasury Secretary Bessent, others that have a hand in fiscal policy. What about what we're hearing from the monetary policy makers? Because if we can put to bed, at least for now, Alonzo, the concern over whether or not Chairman Powell stays in his job, then it becomes a question of how he and the rest of the FOMC actually decide to do their jobs. If they're still paying heed to inflationary risk and not going to be cutting rates in the face of potential growth and labor market risks, where does that leave us as the president has taken to calling Mr. Powell Mr. Too Late?
Look, it's tough. That's the one job I would not want to have in this world is Jerome Powell's job, because he has to battle that public perception that he has been late in the past, and that from a monetary policy, they have made mistakes in the past. So as they look forward, I think they're going to want to be patient. They're going to want to see how this data comes in, and the pressure is mounting. Obviously, the president is very vocal on social media, and he has a right to. But at the same time, Wall Street, and I think in general, has pushed back against the fact that we can't force monetary policy. And we're going to wait and see. I think May 7th is going to be a good indicator of what they're looking at and how they feel. And we get a little bit of data. We get GDP, personal income, personal spending. So the Fed will have some good data going into their meeting in a couple of weeks to lay the groundwork and the blueprint on how they cut rates, hopefully this year.
Hey, Alonzo, if our radio listeners could see you right now sitting in your office on Bloomberg TV or on YouTube, they'd see a Cybertruck sitting behind you on the shelf. We got big news from Elon Musk last evening. Is Wall Street better off with Elon in Washington or paying attention to his companies?
Yeah, Joe, I forgot to take that down. So, look, we heard from the earnings. We heard on the earnings call that Elon is going to potentially come back, and that's what investors wanted to hear. I mean, Dan Ives has been, very, very vocal about this, and in some ways, I agree that Elon has to come back and lead Tesla. He has a lot of companies, and I don't know how he has the time in his day to get it all done, but it is likely that he transitions back to leading his private companies and leading Tesla, and that was welcome news. I thought the earnings call was great. Tesla's had a tough run this first quarter, and hopefully things turn around going into the back half of this year.
All right, Alonzo Munoz, thank you so much for joining us. He's Chief Investment Officer and founding partner at Hamilton Capital Partners, here with us on Bloomberg TV and radio as we digest the news we're getting from the administration, the change in tone, frankly, we're getting not just on Chairman Jerome Powell, but on tariffs too. And of course, you're seeing a rally that is still a rally, even if it's not quite as ferocious as it once was. Joe Matthew, as we're up 2.2% right now on the S&P 500.
What do we do without Elon Musk in Washington? He is apparently winding things down. We'll talk to the panel about that. Rick and Jeannie are on the way in next here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. We're well off session highs on the S&P right now, higher by 2.3% at the best level of the session. We had the S&P rallying by 3.4%. This on media reports that the U.S. was considering lower levies on China. S&P up 122. The Dow up 687 now, up 1.8%. The NASDAQ Composite Index up 541, up 3.3%. The 10-year yielding 4.35%. The 2-year 3.84%. To be clear on the 10-year, 4.35%. Gold now down $93 the ounce. Spot gold down 2.8%. $32.87 the ounce. West Texas Intermediate crude $61.93 a barrel, down 2.7%. And Bitcoin now up by 2.9%. 93,840 on Bitcoin. Goldman Sachs's executive pay proposal has won majority support from shareholders despite criticism that the bonuses were excessive. $80 million, easing concerns over the firm's push to retain top talent as it competes with buyout firms. Goldman Sachs shares, they're gaining now by 3.2%. Recapping stocks higher, S&P right now up by 2.3%. Back we go to Washington as balance of power continues. And once again, your hosts, here they are, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you, sir. From world headquarters in New York, the voice of Wall Street and the New York subway, as Wall Street again keys off rhetoric from here in Washington, with the White House backing off China tariffs and backing off threats to fire the chair of the Federal Reserve. Add the news on Elon Musk, and we've got a very different picture than we were looking at just a couple of days ago, as, of course, the leader of Tesla and SpaceX, and, while we're at it, the Doge, suggests that he's going to be winding things down, making us wonder, will Elon Musk no longer be a government employee by the time the Resolute desk is returned to the Oval Office? He spoke with investors on the Tesla quarterly conference call last evening.
Starting probably in next month, May, my time allocation to Doge will drop significantly. I'll have to continue doing it for, I think, probably the remainder of the president's term, just to make sure that the waste and fraud that we stop does not come roaring back.
But how much waste and fraud have they actually stopped? How much work will actually be done for the Department of Government Efficiency by the time May comes around? On that note, let's turn to our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick, of course, Republican strategist and Stone Court Capital partner. Jeannie, Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick, when he considers, or when he characterizes his work as being mostly done, talks about having rooted out all this waste and fraud, how much tangible do we really have to show for his work over the course of the last several months? Because remember, we came into this being promised $2 trillion in cuts potentially.
$2 trillion that before the administration even took office got down to $1 trillion. And of course, they keep a running total of all these cuts that changes every day because a lot of people focused in on that and realized a lot of those cuts were either done during the Biden administration or that they didn't represent accurately what had been done. Look, the real story of Doge won't be told for a while. We also know that there are lots of lawsuits in federal court to determine whether or not the people who were fired under the Doge fraud, waste, and abuse efforts will actually be able to ultimately be severed. But look, I mean, one thing is clear. They've changed the culture in Washington in a very material way. They showed that an administration that is willing to take some shots can actually do what many, many administrations prior threatened to do, claimed they were going to do, and never did. And that is to actually make a more than cosmetic change on the organization of the federal government. The Department of Education will never be the same. There's a question as to whether USAID ever exists again in as an independent government agency. So there are a lot of examples of impact, and I think at some point there'll probably be books written about the positive and negative impacts of Doge and of this period of time. But there's no question the one thing Doge is going to be mostly remembered by is the cheerleader in chief, Elon Musk, and the impact he left on Washington, D.C. And I'm not sure we have the final chapter of that being written yet.
Well, that's clear, Jeannie. So, okay, the Doge leaves a mark, but is this another example of the White House backing off goals? We've just listed a bunch of them when it comes to tariffs, right? We've seen a bit of a reversal there, a softening tone, suddenly going from firing Jay Powell to I never had any plans to do that. Now the Doge, which was intended to cut $2 trillion, will not have the receipts to prove that. Is this a consistent theme here that we're seeing out of this White House?
Yeah, I think it is. And I think it is probably a good thing politically for the administration that Elon Musk is going to be stepping aside. I mean, we always knew there was an end date to this. He said yesterday it's coming maybe sooner than some people thought. But the reality is that the politics of this have not been good, either for Elon Musk and Tesla and his other operations, or for the White House. Because again, while most people support consistent cutting of the federal government in ways that make sense, streamlining and efficiency and all of those things, we heard from the town hall that Byron Donalds had this week when he was home on break. People are not buying this. When you say Doge, when you say Elon Musk now, what comes to their mind is a chainsaw-wielding billionaire and not the efficient, effective cuts that the administration had hoped for. So probably on all sides, this is a good thing that they can sort of amicably part ways.
But is it a good thing for Democrats, Jeannie? Because Elon Musk was emerging as the main foil here. It was less about Donald Trump or referendums on Donald Trump, as we've just seen in special elections just weeks ago, and more about Elon Musk himself. What happens if he kind of disappears from the Washington spotlight? What do Democrats do then?
I think Democrats should focus like a laser beam on the economy, the Medicare, Medicaid, Social Security fight that is coming up, what the administration and Republicans in Congress are going to do about this big reconciliation bill. Elon Musk has been the focus of a lot of Democrats' ire, and some people feel for good reason. But the reality is, and I've long said, their focus should be on the person in charge, and that is not Elon Musk. That is the president. I mean, let's be fair to Elon Musk. He broke with the president on the president's number one issue, which is tariffs. The president owns what's happening in Washington, not Elon Musk. So I don't think this should hurt Democrats.
Rick, I don't know if Elon Musk gets to keep the chainsaw from CPAC. That will be the enduring image that a lot of Americans have from this moment in time. There you see it on Bloomberg TV and on YouTube. But I wonder if the strategy, because you just listed a couple of things, USAID, that's going to leave a mark, right? Some of the cuts we've seen at various federal agencies, but it brings me to the firing of federal workers. Americans aren't looking at receipts to see if they stack up to $2 trillion. Does the impact, though, of firing thousands upon thousands of workers lead most people in the electorate to think that Elon Musk did what he said he was going to do?
Yeah, I think the optics are pretty clear, and certainly going to be very clear to the sort of MAGA base, which is we finally kept the promise that, we were going to cut up Washington, drain the swamp, and get rid of all these government bureaucrats that were part of the deep state. And he's going to get credit for that, and Donald Trump's going to get credit for having brought him along to do that. But you're right. I mean, we're going to see that chain-wielding maniac on the stage of CPAC in a lot of midterm commercials. And I look forward to the return.
That's got to be true. Chainsaw for bureaucracy, Kaylee.
Well, of course, that chainsaw-wielding maniac, if that's how Rick would like to describe him. It also happens to be the CEO of Tesla Motors.
True enough.
And was serving in that capacity last night when the company reported results. And he immediately had to get on the call with analysts, not just to announce this Doge news, but also talk about, Rick, the impact tariffs are having on Tesla's business, both on the energy side and on the automotive side, suggesting that he doesn't necessarily agree with President Trump on this, though he said that it is ultimately a decision for the president. What do you make of that kind of rhetoric publicly on an earnings call coming from someone who is supposed to be one of the closest advisors to Donald Trump?
Well, I think self-interest caught up and overran public interest to Elon Musk in the last couple of weeks. Nobody I think, has lost more money in the world than Elon, hundreds of billions of dollars off of his net worth, in just since this administration took office. I'm sure there were days he was scratching his head looking at the numbers going, what have I done to myself? You earned it, you lost it, it's all up to you. But look, I mean, he was cautioning about, the tariff program even immediately after Independence Day, Liberation Day. And so you could tell he understood the potential ramifications on his own businesses. And now, frankly, they're calling him home because of that impact. And so whether it's because of his public image and there's fewer car sales, or whether it's because of the impact of some of these tariff regimes on supply, there are a lot of impacts on Elon Musk. And I think he's learned a valuable lesson on participating in the public sector. Sooner or later, the Klieg lights of Washington get right down to what you're all about. And the fact that he's leaving now because of his economics is not going to be the first time somebody in public service has done it, but certainly the highest profile version of that.
Wow. Well, Jeannie, I don't know when the final version is going to be written here, but is there a chance that we look back on this and even Democrats like you say, boy, we were lucky to have Elon Musk in the Oval Office in that period of time because he's one of the people who pulled Donald Trump back on tariffs?
I don't think we've seen evidence that he pulled Donald Trump back on tariffs. I'm going to give that more to people like Scott Bessent and those CEOs. But to his credit, he did speak out against them. The reality is when you guys come to one of my classes, I teach a lot of political risk. And Elon Musk took a big risk here, and he's a big gambler. That's why he's been so wildly successful. And for the immediate aftermath of the election, it was paying off big time. Nobody was closer to the president than he was, and he got a lot of money off of that. But now he's seeing the flip side of that, and the price that he is paying are these boycotts and this backlash. We don't know how this story ends, and one of the big questions is, what does this do to Tesla's brand? EV buyers are a lot of people who are not very close to Donald Trump's policies, and so for the creator and the owner and the major spokesperson for Tesla to go and be this close best friend of Donald Trump is something that has had a real impact on his business. So I think we don't know how this story ends either for Tesla or for Elon Musk. But the reality is Washington is under Republican control and the control of this president. We shouldn't have to have his best friend pull him back. He should look at the responsibility of his policies as they go into effect and pull them back on their own when they're not working.
I think we just got an invite to Jeannie's class.
I'll take her class.
Absolutely. I'd say we bring the whole show in there. We could learn a lot here. Are you kidding me? Jeannie Shanzano and Rick Davis, thank you both. Our panel today. And we'll have much more ahead here on Balance of Power. With Ukraine also in the news, there's a lot to cover here. And Melinda Herring from the Atlantic Council will be with us next as talks potentially hit the rocks. That's coming up next here on Bloomberg.
1:40 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with a developing story. Headline right now on the Bloomberg Professional Service: Elon Musk's Neuralink business said to be eyeing funding at an $8.5 billion valuation. Again, the headline, breaking news right now. Elon Musk's Neuralink said to be eyeing funding at an $8.5 billion valuation. U.S. stocks are advancing. We are well off session highs, but still looking at a gain of 1.8% on the S&P 500 index. Putting that in context, had been up more than 3% at the best level. Right now, higher by 96 points, 53.84 on the S&P. The Dow up 495, now up by about 1.3%, while NASDAQ is up 462 for the NASDAQ Composite Index, a gain right now of 2.8%. The 10-year 4.36%, with the 2-year 3.84%. Gold down $100 the ounce, now at $32.80. Drop there of 3%. West Texas Intermediate crude 61.68 a barrel, down 3.1%. And Bitcoin now higher by 2.7%. 93,665 on Bitcoin. Bottom line here, stocks higher but well off session highs. Treasury Secretary Scott Bessent's remarks on the U.S.-China trade war causing stocks to pair gains despite earlier reports that the U.S. was considering lower tariffs on China. Again, repeating our top story at this hour, Elon Musk's Neuralink said to be eyeing funding at an $8.5 billion valuation. Balance of Power continues right now. Back to go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet keeping us covered from Neuralink to the Treasury Secretary. Thank you so much. As Charlie alluded to, Secretary Bessent telling reporters that the U.S. is not looking to unilaterally lower tariffs against China, though perhaps if you're looking for areas of optimism, he did suggest a trade deal with India is getting closer, at least some kind of understanding as to what the broad architecture of that could look like, keeping in mind these deals may take some time to actually fully finalize. But of course, that has been the effort underway in India this week by the Vice President of the United States, J.D. Vance, who had bilateral talks with the Prime Minister, Narendra Modi, and talked about trade. But we also heard from the Vice President while he was in India today about a completely separate issue, and that is ongoing efforts toward ending the war in Ukraine, a peace agreement being reached between Ukraine and Russia. This, of course, as there was a meeting in London today that was supposed to be attended by the Secretary of State, Marco Rubio, and those at the highest levels in foreign policy in the governments of France and Germany and the UK and Ukraine as well. Rubio didn't go. The envoy, Keith Kellogg, went instead, and this was reduced to kind of a technical level meeting, and this is how the Vice President characterized the state of things.
We've issued a very explicit proposal to both the Russians and the Ukrainians, and it's time for them to either say yes or for the United States to walk away from this process. We've engaged in an extraordinary amount of diplomacy, of on-the-ground work. We've really tried to understand things from the perspective of both the Ukrainians and the Russians. What do Ukrainians care the most about? What do the Russians care the most about? The current line, somewhere close to them, is where you're ultimately, I think, going to draw the new lines in the conflict. Now, of course, that means the Ukrainians and the Russians are both going to have to give up some of the territory they currently own.
Another suggestion of walking away, echoing Marco Rubio, who made that reference on Friday, knowing that Donald Trump campaigned on a promise to end this war. As he said, he was the only one who could do it. He would end this within hours on day one. He's speaking very differently today on Truth Social. President Trump referring to comments from Volodymyr Zelensky, as he says, boasting on the front page of the Wall Street Journal that Ukraine will not legally recognize the occupation of Crimea. It's a long post. Donald Trump goes on to write, "It's inflammatory statements like Zelensky's that makes it so difficult to settle this war. He has nothing to boast about. The situation for Ukraine," he says, "is dire. He can have peace or he can fight for another 3 years before losing the whole country." That's where we start our conversation with Melinda Herring, non-resident senior fellow, Atlantic Council, and a voice of experience when it comes to all things Ukraine. Melinda, it's great to have you back. Is that where this is going, losing the whole country?
Not quite, Joe. And there's a few other factual errors in Donald Trump's statement that he put out. So he says, why didn't Zelensky and all of Ukraine fight for Crimea when the Russians illegally annexed it? And the Ukrainians, he forgets that the Ukrainians didn't have any money, that there was no way to fight back. And I think that's an important point as well. But no, things are not headed in a good direction. We know that the White House has lost patience with negotiations, and they found this entire negotiation exercise much more difficult than they expected.
Well, and certainly President Trump has suggested that Vladimir Zelensky himself is contributing to that difficulty. The U.S. position seems to be, Melinda, that Ukraine is going to have to be willing to give up some territory if they ultimately want a settlement in this war. Is that the wrong way of thinking about this? How could they possibly reclaim all the territory that has been lost, Crimea included?
Hey, Kaylee, I don't think that's actually the stumbling point. So we've seen a 7-point peace plan, and that's what we thought they were going to be arguing about in London. And the real stumbling points are the U.S. is asking Ukraine to give up NATO membership. It's also asking, it also wants to recognize Crimea as legally Russian. And this, I think it's worth reminding our audience, back in 2018, when Donald Trump was president the first time, the State Department issued something called the Crimea Declaration, and it said that we will never, ever recognize the use of force to take territory, that this is illegal under international law. So if you go back to Donald Trump's first administration, the policy that they're trying to push now is not very consistent. I mean, look, it's politics. No one's very consistent, but it's worth pointing out that they're in a very different position. So I don't think Zelensky is willing to concede some territory. I think he understands he has to, but the real issue is there's no security guarantees. And the U.S. is unwilling to give them security guarantees, and the British government has said that it must have a U.S. backstop. So we're sort of stuck. We're very stuck. But there's a bigger issue that I'm really worried about. So when Donald Trump and J.D. Vance say, we're pulling out, I want to know what that means. Does that mean we're not going to participate in the process, or does that mean we're not going to cooperate with intelligence sharing, and we're not going to allow Europe to buy weapons for Ukraine? If it's the second, Ukraine is in a really hard spot. If it's we're not going to participate in the negotiations, I'm a lot less worried.
Interesting. In the end, though, Melinda, you've been talking to us since before the invasion actually took place. Every wrinkle, we've had a chance to get your analysis. Do you see any world in which there is a peace deal struck that does not favor Russia?
So I think it depends on the facts on the ground, but Ukraine is not going to agree to anything, Joe, unless there's some kind of security agreement to ensure that Russia doesn't come back. So right now, Russia occupies 20% of Ukraine, and they're likely going to have to give up some territory. But when I talk to medics on the front line, Joe, they tell me that we are totally committed to defending Ukraine, even if the U.S. is not there. So the mood in Ukraine has not changed, but I don't think the situation is ripe for negotiations at this point.
Well, Melinda, I want to return to your point about kind of characterizing what walking away actually means for the United States. If it were to be just we are removing ourselves as a third party in these negotiations, leaving it for either other countries to mediate or Ukraine and Russia to sort this out among themselves, would that actually make it easier for the Ukrainians, or does that make the whole thing more difficult because Vladimir Putin may not want to go ahead or essentially take this directly to Zelensky?
So the negotiating format is a little bit difficult, Kaylee. So right now, Putin is saying that he's willing to meet with Zelensky. And Zelensky has said before, I will not meet with him directly, that there has to be an intermediary. Zelensky is now saying, I'm willing to consider all formats, but you have to stop killing civilians. And that's one of the difficulties is Russia has not stopped its missile strikes. So that is a prerequisite for any kind of negotiation. To your bigger point, though, if the U.S. were to step back from being the lead negotiator, I think it's not the end of the world. I think Britain could take that place. I think that Turkey would be interested in taking that place. I think there's some Middle Eastern governments that might be willing to take that place. And Ukraine doesn't see Washington as a neutral actor at this point. Every one of the positions that they've been pushing in these negotiations is seen from Kiev as something that doesn't favor them. So I don't think it's a terrible thing if Washington walks away from the negotiations.
There was a time, Melinda, when peace appeared to hinge on the signing of a minerals deal. Remembering Scott Bessent's ill-fated trip to Kyiv, we're still, according to President Trump, expecting something to happen. Here's what he said about a minerals deal potentially happening this week.
We have a minerals deal, which I guess is going to be signed on Thursday, Scott, next Thursday, soon. And I assume they're going to live up to the deal, so we'll see. But we have a deal on that. No, I have no comment on that. I have no idea. That's his statement, not mine.
All right, so that was last Thursday. Melinda, will it still happen?
Joe, I don't know. I've been poking around on this. The expectation is that it was going to be signed tomorrow. That was 5 days ago where the initial agreement was signed between the United States and Ukraine. And it's an 80-page document. The details of that document haven't been released yet. But what's interesting is that the 7-point negotiating document that the United States gave Ukraine, one of the points was the mineral deal. So it seems like the mineral deal is contingent on Ukraine going along with this bigger plan that President Trump and Vice President Vance had envisioned. So I think it looks like it's in trouble, but let's watch and see.
Well, we certainly will be on watch tomorrow to see whether or not this deal ultimately is signed or if there's any progress toward it in the first place. But the original basis for it, Melinda, was that having an economic incentive or economic interest in Ukraine would be some kind of security guarantee. And obviously, we've discussed that thoroughly with you. In the absence of a deal being signed and the U.S. still not being willing to pony up on any other kind of security guarantees, what position does that realistically leave Ukraine in? I'm just trying to consider their position here as they decide whether or not to sign on the dotted line.
Right. So Ukraine is going to put increasing pressure on European governments, London in particular, to make good on the commitment to put troops on the ground and provide some kind of security backstop without Washington. I think that's where we're going next. And I wasn't privy to the discussions today. I'm sure that was discussed in London. And I think there'll be increasing pressure on Ukraine's other friends in Asia and in other parts of the world to deliver military kits so that Ukraine can stay in the fight and defend itself.
Was this always the direction we were going in here, Melinda? We're just kind of getting to the reality of the matter now? Or did that meeting in the Oval Office send things off the rails and potentially permanently for President Zelensky?
Joe, it's a great question. I've been told that President Trump was actually in a good mood and wanted progress in the relationship that day. And we still don't know why it was spiked. I think it's possible that Donald Trump, look, never say never with Donald Trump, right? It's possible he'll wake up tomorrow and say, I'm fed up with Vladimir Putin. He's unwilling to move. I don't see it happening, though, at this point. I think that Donald Trump wanted an easy deal. This is not going to be an easy deal. And I think he's going to move on, unfortunately, for 40 million Ukrainians.
Wow.
Wow. So Steve Witkoff, as he gets ready to head to Moscow, and Vladimir Putin has no real hope of success in your mind, Melinda?
Look, you can't force the Ukrainians to sign a deal that won't bring them lasting security. So I don't see how this deal goes forward. This is Witkoff's fourth trip. And I think they're going to discuss the peculiarities of this agreement. But Zelensky's already come out and said that accepting this agreement would violate the Constitution of Ukraine, and no president can do it.
Well, Melinda, I'm not sure what happens from here. What signs should we be watching for? Is it a meeting that includes Marco Rubio and Witkoff that would get your attention? What are you going to see that you might take seriously?
I'm going to be watching the battlefield. That's my eye is in Sumy in northern Ukraine. I want to see what the Russians are doing there, and I'm going to continue to watch and see. There's some interesting reports that North Korea is also sending workers to Russia, Joe, which indicates that Russia doesn't have enough people to be fueling its economy. So I don't think much is going to happen on the high level negotiations, but the real issue is the security guarantees and also the production of weapons in Europe. So watch that space.
All right, we will be, and we trust you will be as well, and continue to come back and share your insights with us. Melinda Herring, Senior Fellow at the Atlantic Council's Eurasia Center, joining us here on Bloomberg TV and radio. Thank you so much, helping us keep, of course, one eye on geopolitics and another on economics in the financial markets as we consider everything we've heard in just the last 24 hours, frankly, Joe, on tariffs from this White House, which obviously has changed in tenor from what we were hearing previously, and we're seeing markets take note. Not the explosive rally we were seeing earlier necessarily, but still looking at almost a 3 percentage point gain on the NASDAQ 100, up more than 2% on the S&P as we speak.
Feels like an important inflection point when it comes to the economy, when it comes to tariffs, of course, the Fed chair, and yes, Ukraine. We'll have a lot more on this, on all of this. 5 p.m. Eastern Time, the late edition of Balance of Power. I'll meet you back here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser. and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone. Carol Master, Tim Stenivek, live here at Bloomberg headquarters in New York City, Wednesday, April 23rd. It's kind of a Fed Wednesday because we are waiting for the Beige Book due out in just about 30, 40 seconds here. Keep in mind that what we get in the Beige Book, this will help shape the discussions at the May 6th, 7th Fed meeting, FOMC meeting. So that's why we care what we get from these minutes.
Yeah, just a little preview. Bloomberg Economics saying that it will reflect the substantial uncertainty in the economy. Again, waiting on those anecdotes from the Beige Book coming in just the next couple of minutes.
Yeah, and we're going to head out to our Mike McKee, who can, right in the moment, analyze what we are getting from those minutes and how the Fed will play into that. In the meantime, we're watching the markets, folks, because we've got a rally underway. We are definitely on the U.S. equities side, higher across the board, up more than 2% on both the S&P and the NASDAQ 100, up almost 3% on the NASDAQ 100, well off our best levels of the session. Some of that has to do with some of the news coming out of D.C. when it comes to U.S.-China trade and tariffs, whether or not we're moving forward. We're going to dig into all of that over the next 60 minutes.
Also taking a look at what's happening in the treasuries, in the bond market, we're seeing yields lower at the long end, yields slightly higher on the short end of the curve.
Right, and that is something, too, that we're going to watch to see if there's any kind of reaction. Keep in mind, we continue to have Treasury auctions. We did have that 5-year notes drawing 3.995% versus 4.005%, the pre-sale and the issue yield in terms of that. So we're going to talk a little bit about the auctions, too, whether or not we're seeing investors show up for that, a real sign of investor, perhaps foreign investor confidence in the U.S. economy. So that's really important as well. We're also going to get into Elon. Sounds like he's heading back to the office.
I guess. I mean, we all knew that it would come to an end at some point. That's the status of the type of employment that he has with the U.S. government. He'd have to go back whether he were paid or unpaid. But Tesla investors certainly cheering what they learned yesterday on that earnings call, that his work will wind down substantially starting next month.
All right, getting a few headlines from the Beige Book. Among them, the Fed saying that the U.S. economic activity little changed since the previous report. So let's get into it and dig into it. Let's head out to D.C. That's where we find our Michael McKee, of course, Bloomberg TV and radio economics and policy correspondent. They're going through the Beige Book. Mike, what's jumping out for you?
Well, this is a much more downbeat Beige Book than we have seen in recent months. The Fed finding, as expected, that a lot of companies are concerned about what's going to be happening with the economy. Economic activity, little changed, the Beige Book says, but uncertainty around international trade policy was pervasive across reports. Just 5 districts saw slight growth, 3 said activity was unchanged, and the remaining 4 reported slight to modest declines. Auto sales were robust, but non-auto consumer spending was lower overall. Both business and leisure travel were down on balance, and several districts noted a decline in international visitors. So the Beige Book anecdotal reports kind of matching up with what we have heard in earnings reports and others. Manufacturing mixed, they say. Energy, modest growth. Agricultural conditions, fairly stable. Now, in terms of labor markets, they were essentially little changed, according to the Beige Book. 4 reporting a slight increase, 4 reporting no change, 3 reporting a slight decrease. But hiring, they say, generally slower for consumer-facing firms than business-to-business. And a big decline was noticed in government roles, or roles at organizations receiving government funding. That'll be no surprise. Several districts reported firms taking a wait-and-see approach to employment, pausing or slowing hiring until there's more clarity on economic conditions. And there are some scattered reports of firms preparing for layoffs. Prices were up. Most districts noted that firms expected elevated input costs resulting from tariffs, and they have received notices from suppliers that costs would be increasing. They report adding tariff surcharges or shortening pricing horizons to account for uncertain trade policy, and they expect to pass through tariffs to consumers. So the Beige Book basically telling us what economists have forecast, that people are hunkering down and getting ready for a negative shock to the economy if it indeed comes through.
Yeah, I thought it was interesting, Mike, you noted auto sales, most districts seeing moderate to robust sales of vehicles. generally attributed to a rush to purchase ahead of tariff-related price increases. It's something that we've covered quite a bit on our program. Bloomberg News has written about that, people going out and buying cars ahead of those price increases that are expected as a result of these tariffs. The question I have is, how does this then inform the May 6th to 7th meeting of the FOMC?
It's not going to change anything because these are basically reports that people are getting ready for a bad economic environment, but it doesn't mean they've taken the steps to do so. Sort of backs up what we've seen with the Conference Board and University of Michigan sentiment indexes and what the purchasing managers indexes are telling us, that companies are nervous and consumers are nervous. But the Fed's going to want to see some hard evidence that the economy is slowing down, because at the same time, the Beige Book notes prices are going up, and that could be inflationary. So I don't think it makes a bit of difference to the May 7th meeting. They are going to be on hold until they have hard evidence one way or another.
Yeah, it doesn't look like we're seeing too much in terms of market reaction off of these numbers. All right, Mike, so what do we do with this stuff against the backdrop of headlines? You're in D.C. As you know, we are laser focused on everything that comes out of the White House, in particular when it comes to trade, tariffs, U.S., China, and then maybe what the president may or may not said about Fed Chair Jay Powell's tenure. So roll it all up for us.
I think basically, Carol, what you have to do is, if you can, avoid all the headlines. But if you've got to make a decision, if you're a business leader, you're going to have to watch all the headlines because they change on a minute-by-minute basis. Today, we're talking soft on China, although the president says he's not ready to cut their tariff levels yet. But Scott Bessent, the Treasury Secretary, says it's going to be 2 or 3 years before they can reach an agreement. So what do you do? Do you go ahead with plans to expand, or do you go ahead with plans to pass along price increases? You just have to watch on a day-to-day basis and sort of take it as it comes. And when that happens, what do people do? They sit on their hands.
And then we talk to Mike McKee and get the analysis of what exactly is going on. Hey, Mike, before we let you go, we just want to get your thoughts on what we heard yesterday from the president, the ongoing commentary from him about the Fed and about Chair Powell's strategy and role. What's the right way to think about what's going on here? We certainly see the market reaction.
Well, I think that's the right way to think about it. If you look on the Bloomberg, if you have a Bloomberg, call up the GIP for the S&P 500 on Monday, and you can see the big tumble that it took. And I'm sure that's what Scott Bessent and his colleagues did. They went into the Oval Office and showed that to the president and said, if you don't shut up about this, this is going to keep happening. And people tend to think of the stock market as the economy, so it would bring consumers down a lot more and scare them a lot more and likely lead them to cut back on spending. So the president maybe learned his lesson. The problem is whenever you hear him say things like this, it reminds you of the old Simpsons cartoon. I haven't fired the Fed chairman yet. He could come back.
Well, that...
It always goes back to The Simpsons, Carol.
You know, doesn't so much.
It always does.
Yeah, there's a couple of things, right? It just goes back to... I am curious, though, you know, Treasury Secretary Bessent gave a keynote, right, and answered some questions in Washington earlier today, and then he spoke to reporters after that keynote, and he demurred. That was the word Bloomberg used when he was asked if President Trump firing Jay Powell is ruled out. The doubt remains. I guess, you know, how do you, Mike, think about, are we going to see constant nagging and criticism potentially from President Trump as we go on here, and that is going to be constantly the backdrop, like to kind of undermine him? And what problems does that create for Fed Chair Jay Powell?
Well, I'll give you a best case theory here, and that is that the president will continue to criticize the Fed and wish that they would cut rates. He did that last night, even as he said he wasn't going to fire Jay Powell. But he's probably not going to do anything about it other than to jawbone, unless the Supreme Court, in one of those cases we've talked about this week, rules that it is fine to fire the Fed chair.
Yeah.
And then it's legal, and Trump could do it, and that might tempt him to. But for right now, it is probably sidelined, but the tweets will not be silenced.
All right. So then just to push one further, one final question, 30 seconds here, Mike. So what is the impact, though, if President Trump continues to question Jay Powell's moves and undermine him? What's the cost of that?
There isn't really much of a cost. This is the kind of thing that Fed officials go through, whether it's from a president or members of Congress, all the time. Criticism of their monetary policy, and I've talked to several of them, and they all kind of say the same thing. We just let it go over our heads. We're going to put our heads down and do what the economy needs, not what the politicians want.
All right, so appreciate it, Mike, as always. Michael McKee, of course, there in D.C. He is Bloomberg TV and radio and Bloomberg News economics and policy correspondent out there. And, of course, the latest on the Fed's Beige Book. If you missed anything, check it out at Bloomberg.com or go to the Bloomberg.
Well, let's get to today's equity trade because, as you mentioned, we are higher across the board, though off our best levels of the day. I want to bring in Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams. Gina, the rally yesterday, the rally earlier today, just on hopes and dreams regarding what we were talking about with Mike, the attacks on Fed Chair Jay Powell, perhaps a resolution to the trade war between the U.S. and China, but no fundamental changes as we can see?
No, it's a trader's market, Tim. It's definitely a trader's market. I think we are trading up a lot, down a lot on any kind of whisper that something is going to change with respect to tariffs. Put it in the big picture. I was looking at a chart of the S&P 500 today. We're right back where we were the day after Liberation Day.
Seriously.
Which is really interesting. So
the day after, so when the market digested some of the
as the market started
higher
digesting.
than expected tariffs.
Yeah. So we're right back to where we were as though kind of, Liberation Day didn't happen, which is interesting. Nonetheless, we're down about 11% from our
So what do you do with that?
Yeah.
Someone who follows the moves. And how do you put that?
Yeah.
I don't know. How do you make sense of it? Against your against your models, which you really follow closely.
Right. Well, I think frankly, we try really hard not to get caught up in the day-to-day. In our broader scheme of things, we're very data-centric, right? So things that we follow are going to be, how are earnings progressing this season? What are we getting out of companies with respect to guidance? How is revision momentum shifting? Where are valuations relative to long-term averages? Those are the things that really frame our investment strategy. And yes, the price can move dramatically on a day-to-day basis, particularly when you're in the midst of a bear market. This is just how it is, right? Is the prices tend to move very dramatically, very headline focused, and traders are having a whole lot of fun while the investor base is trying not to get too whipped around.
You said we're in the midst of a bear market. We're not 20% down from the highs earlier this year. We barely hit it a couple weeks ago,
right?
But we bounced off of those. Why are you still calling it a bear market?
Yeah, I don't really subscribe to the percentage decline as definitionally what makes a bear market. I think it's you're right to question me on that. It's about volatility, and that's what we started talking about. The day-to-day swings. You don't have days of up 3% in the midst of a healthy bull market trend. Right, but you do have those in the midst of a bear market corrective process, and we've been in that process in fits and starts since February. Frankly, it just got a whole lot crazier since Liberation Day.
So if that's not the right way for us to be looking at the definition of a bear market, I assume the definition of a bull market is not what we would look at traditionally either. What should we look to, in your view, as the definition of when this starts to be a bull market again?
Yeah. You're technically not back in a bull market until you surpass the former peaks. So you've got to get right back, all the way back to those February highs, which for the S&P 500 are north of 6,100, before you can feel comfortable that you've reestablished some form of an uptrend. I know that sounds really pedestrian, but nonetheless, just in a technical sense.
It's as simple as that, right?
Yeah, you kind of need to surpass the former peaks, resume the uptrend longer term to be back. There are other technical indicators that I like to look at, like RSI, for instance, a 14-day RSI. A healthy bull market trend has a 14-day RSI that's ranging above its 50, the midpoint, and only testing 50, 45 on the downside when it does correct. And you see that stocks, when they're in an uptrend, when they're in a bull market, RSI is persistently above that 50, that middle line. So that middle line is very important as well. You also, in a healthy uptrend, have more than half of S&P 500 constituents trading above their 200-day moving average. So that's another definition of what makes a bull market versus a bear market. When you have less than half of stocks that are participating, that are trading above their 200-day moving average, you're generally in a bear trend versus a bull trend.
Isn't it a little wackadoo if you consider where we were at the start of the year?
Right.
Where we were talking about American exceptionalism. I think we were talking about the rally broadening out, wasn't it? Kind of ish,
yeah,
a little bit, or like it's just, and like where we are right now,
huge change.
Like, it's just staggering.
Right. And I think, that was definitely a big theme for us in 2024, was this broadening rally, a rotation, especially by the middle of 2024, it became very evident that leadership was shifting. We were seeing
it was more
tech
like
stocks start to
last
lose
year.
a little bit of leadership, and financials really start to pick up gains. After the election, you had a lot of false signals. Really big divergences in election-based themes were a big red flag that markets were basically pricing as though this president would give them all of their hopes and dreams.
Yeah.
And then coming into January, we started to see a little bit of dismantling of that. And that only accelerated into February and March.
Can I ask you something? And something I feel like, Tim, so many people, I'm sure, say to you, it's a self-inflicted wound. Everybody kind of is like, we know. Like, if you look under the economy, it was doing pretty well.
Yeah.
So we know exactly what this is happening. If things really calm down in terms of the trade tariff war, especially U.S.-China, if we know President Trump isn't going to say anything more about Powell, can things change on a dime? Like, you talked to us about earnings expectations coming down.
Right.
Could that turn around pretty quickly, would it?
It depends upon when it happens. I think time is going to be of the essence here. So if the president were to come out today and say, you know what, just kidding, we're not doing anything. There's enough time that it's been such a short period of time that provided that he can convince companies that that is a permanent statement, which may be a big if, but nonetheless, if he can convince companies that that's a permanent statement, he's not actually making any changes. He's also going to reverse the tariffs that have been implemented on Canada and Mexico. Like, let's remember, we had tariffs that were being implemented prior to Liberation Day, and those are having impacts on the real numbers already. But if he can do something to say that we reverse it all, and he reverses it that quickly, yes, we can go back to some kind of normal operating environment. That doesn't seem very likely. Instead, it seems that we're just going to have to contend with a lot of uncertainty in the near term. And we're seeing this right now in company guidance right now this season. Fascinating. I have never seen a situation in which companies are coming out and giving us scenarios as to how their earnings outlook may look.
Like
They're
United
also,
last week, for example.
Exactly. They're not withdrawing guidance, but they're telling us we may not be able to reaffirm guidance. This is brand new.
Tesla essentially kicked the can down the road yesterday and said, we'll update you in a few months.
Exactly.
But this is, Tim and I were we were saying, I don't ever remember hearing this from a company.
No, it's brand new. This is all very, very different than anything we've been through. Even COVID. Companies just said, you know what? Pulling the dividend, cutting the buyback, withdrawing guidance. We're acknowledging things have changed here.
Not scenarios.
And they weren't giving us scenarios. And just the air pocket of uncertainty right now is something that we have not contended with.
Okay, you mentioned guidance. We have 30 seconds left. Talk to us about the numbers that we're hearing from companies right now and how that works with your models.
Yeah, so what we're hearing so far is roughly 3-to-1 negative to positive. It's very, very strong negative guidance. To the degree that we're getting guidance, it's negative. But the biggest guidance takeaway really is this uncertainty of, we're not going to withdraw guidance altogether, but we're just not able to reaffirm for you right now. Just the degree of uncertainty is profound in guidance. Estimate revision is also quite negative from the analyst community, which you would expect. The analysts were a little too optimistic coming into this year, as was the market. And we are seeing really significant downward revision momentum.
So things are kind of different this time around. That's for sure.
Quite.
Gina, thank you so much. Gina Martin Adams, Bloomberg Intelligence Chief Equity Strategist. Coming up, China and U.S.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. We are, however, well off session highs at the best level of the day. We had the S&P up by about 3.4%. Right now, we are looking at a gain of 2.2% on the S&P. Right now, higher by 116 points with the S&P at 5404. Dow Industrials up almost 600 points, up 596 now, up 1.5%. NASDAQ is up 536, higher by 3.3%. 10-year 4.39% with a 2-year 3.86%. Spot gold down 2.9%, 32.82 the ounce, and West Texas Intermediate crude down 2%, 62.39 a barrel. Bitcoin is surging 3.3% now with a $94,000 handle once again, 94,172 on a Bitcoin. Tesla shares higher after earnings. Tesla now surging by 8.5%. Elon Musk vowing to pull back significantly from his work with the U.S. government and put more focus on Tesla, easing investor concerns about the car maker's worst quarter in years. Again, Tesla up by 8.5%. Balance of power continues, Bloomberg Business Week Daily continues now. And once again, your host, Tim Stanovic and Carol Nasser.
All right. So appreciate it. Charlie Pellet, you are up to date on the markets. All right, folks. I got to say, though, the market swings that we continue to see, we just talked about it with Gina, they're coming after we get kind of different messages or a constant flow of messages out of the nation's capital. And this specifically after members of the Trump administration weigh in on the health of trade negotiations. Now, the Washington narrative around trade talks and tariffs between the United States and China continue to create swings in U.S. stocks. You see it in the trade today, certainly again. Earlier today, both the U.S. Treasury Secretary Scott Bessent and President Trump weighing in separately on a trade deal between the United States and China.
We are going to have a fair deal with China. It's going to be fair. Everything's active. Everybody wants to be a part of what we're doing. They know that they can't get away with it any longer, but they're still going to do fine. And we're going to have a country that you can be proud of.
There is an opportunity for a big deal here, that the U.S. is looking to rebalance to more manufacturing. The identity of that would be less consumption.
Okay, so that was President Trump this morning. That was Treasury Secretary Scott Bessent at an event. He was giving a keynote and taking some questions at an Institute of International Finance event in Washington earlier. Keep in mind that after that event, the Treasury Secretary spoke to reporters and he said that President Trump has not offered to take down U.S. tariffs on China on a unilateral basis. So that comment took stocks off their highs today. So it's been really moving the markets based on what we hear about the tariff talks or trade going forward. Let's get to it. It's confusing. Let's see what our Bloomberg News managing editor for U.S. economy and government, Mario Parker, has to say about this. He joins us from our bureau in Washington, D.C. So where are we, Mario, when it comes to U.S.-China tariff talks?
Well, one thing is for certain, just based off of the rhetoric that we've seen, directly from President Trump and Scott Bessent over the last couple of days, aside from the reports of unnamed sources, is that the rhetoric has toned down significantly from where we are about this time last week, right? You had the president saying that he would be essentially nice to China, that the tariffs of 145% will be much lower in the end. You had Scott Bessent yesterday making remarks from what we learned from our sources inside the room, saying that the current dynamic between the U.S. and China is unsustainable, which essentially is common sense, right, when you have the world's two largest economies in a stalemate.
Mario, we heard that the Treasury Secretary say it's an opportunity for a big deal here, that the U.S. is looking to rebalance to more manufacturing. We've done a lot of reporting over the last few weeks about what can and cannot be done according to experts here in the United States. It still raises the question about what exactly the president wants to see here in the U.S. when it comes to more manufacturing.
Well, that's a very deep and philosophical question, really, because if you go back over the course of the last 40 years or so, Donald Trump's vision for his economic agenda, even before he ran for president, was one in which every town had a factory. There was a large employer. Manufacturing was abound, 2 cars in every driveway, et cetera, et cetera. This is the economic part of his Make America Great Again agenda. agenda. Whether or not we can turn back the clock to the degree that the president wants, I mean, there are, as you note, skeptics among the economic class economist class as to whether or not you can really spur that onshoring to the degree that the president wants. Now, on the other side of that, of course, is the White House has touted just a steady stream of investments on everything from chips and AI to other parts of technology that they say will be huge distribution and manufacturing centers.
So bottom line, I mean, can we say progress is being made? What are you guys hearing? How are you reading the tea leaves where it feels like one step forward, two steps back constantly, though, on a lot of issues, especially U.S.-China? Just got about 30, 40 seconds here.
Yeah, well, can't say the progress is necessarily being made. That's the messaging that's coming from the White House, but we haven't seen anything tangible at all. We saw J.D. Vance talk about some things with India earlier. We know that they're engaged in trade talks with several partners from what they tell us. The only thing that we know for sure is that the rhetoric isn't as coarse as it was at the start of this trade war.
Is nothing going to happen with U.S.-China until stuff is done with all the other countries? Do we have any idea in terms of the order of things?
Well, right now, you have the president saying that China wants to make a deal, but he has also dodged questions as to whether or not he and Xi Jinping have spoken. He's also continued to put pressure on China to call the White House. If that's any indication of the movement, whereas they are in direct talks with other countries, Japan, India, otherwise, that kind of gives you a sense of where things are with the U.S. and China on that list.
Yep, hard to keep track of it all, that's for sure. All right, Mario, thank you so much. Glad we could get an update. Mario Parker, he's Bloomberg News Managing Editor for U.S. Economy and Government right there in our bureau in the nation's capital.
So what happens between the U.S. and China is certainly crucial because of the connections between the two largest economies in the world. So we wanted to dig into more of that side of the story. To remind us what is at stake, we've got Bloomberg News trade czar Brendan Murray joining us from London. So there was the Wall Street Journal report earlier on Chinese tariffs. We heard from Treasury Secretary Bessent on tariffs. We heard from the president on tariffs. Still, it doesn't seem like there's necessarily a clear narrative that has emerged despite some of the market reaction that we're seeing today. What is the message that we're getting?
Yeah, I think the message that we're getting is that the hardball tactics that the Trump administration and Trump himself have used for the past several weeks aren't working. They're actually having the opposite effect. China is refusing to come to the negotiating table under the duress that the 145% tariffs are putting on their economy. So I think what you're seeing is the Trump administration getting, kind of changing gears to some extent and saying, you know what, maybe we need to lighten up a little bit. Let's soften the rhetoric and see if that will work. There are no talks going on right now between the U.S. and China. The Trump administration is negotiating with itself for all intents and purposes, because China is saying, this is not the kind of environment where we're going to have conversations. So there'll be a lot of back channeling going on between Trump advisors and Xi Jinping's advisors before a phone call could take place, and some parameters can be laid out for some sort of deal. But as the Treasury Secretary said today, and I believe yesterday, this is going to take years. This is not, if we're talking about a comprehensive trade deal between the world's two largest economies, that's already pretty well interconnected, and we're gonna redo those relationships. It's not going to be done overnight. So we might hear some softer rhetoric in the short term, but this is a long-term story.
What does that softer rhetoric have to look like? Is certainly from the Trump administration for China to say, okay, now we can talk. What specifically? Yeah.
I mean, presumably it's got to be more than talk. It's got to be, Trump lowers the tariffs. He says, okay, China, you did what we wanted to on the fentanyl, issue that we put tariffs on you for. So it's got to be some steps out of the essentially the trade blockade that's been going on. This is gonna cause a lot of economic dislocation in China. It already is, and there is some evidence that the White House is looking at the damage that's happening to the real economy. There are U.S. importers that have basically just stopped ordering anything from China, and they can't get it from anywhere else. So that they have inventories that can kind of buy that they can get through. They can get them through, several weeks or maybe a month or two. But this is gonna the wave of economic disruption is going to hit the U.S. as well. So the issues that are going on in shipping and cargo cancellations are it's just a matter of time before those hit the retailers. The President Trump had a roundtable with Target and Walmart and the big retailers, and the word is that they gave him some views along those lines. So it's not only the bond market and the stock market, but it's the freight market and the real economy.
So let's talk about that a little bit, because Ryan Peterson is the CEO of Flexport. He's been on Bloomberg TV in the past. It's the supply chain logistics platform, and he has a tweet out today that's getting quite a bit of attention. He says, in the 3 weeks since the tariffs took effect, ocean container bookings from China to the United States are down over 60% industry-wide. When, Brendan, are we going to start to see this happening on store shelves, in the stores that we go to, on the e-commerce platforms that we use? And what exactly is that going to look like?
Yeah, I mean, it will mean companies that are trying to get seasonal products for the summertime may have trouble doing that and stocking their shelves. Shipping is a seasonal business. You stock your Christmas shelves and inventories after the summer, and so so the cycle is being disrupted. And the other issue, let's say that the U.S. and China get over their disagreements in the next week or two. They sit down at the negotiating table, tariffs come down, and in the short term, which no one really thinks this is going to happen, but let's just say hypothetically that happens, there's going to be a huge surge in order. All those orders that were canceled are going to go back in again. So we're going to have a disruption. So it's this this bullwhip effect, this whiplash effect that's that we're set up for. So either way, there is going to be some disruption. Some U.S. importers can turn to Thailand or Vietnam, or Cambodia, other places in Southeast Asia to get what they need, but they can't get everything they need. If China is basically the costs from China have basically doubled given the tariffs that the U.S. put on Chinese imports.
Really quickly, 30 seconds here. The codependencies of these two countries, the two biggest economies in the world, still connected, still crucial, or not so much as it was maybe 5 or 10 years ago? Real quickly.
It's still, the people that we talk to say that, that China's role as the global manufacturer is going to stay big and strong for a long time. It can be diminished to some extent. The U.S. can reshore some of that, but it's not going away anytime soon.
All right, man, amazing. Out there in London, Bloomberg News trade czar Brendan Murray. We're going to be coming back to you, and I highly, check out the global trade war alerts that are on the Bloomberg and at Bloomberg.com. Some really amazing stuff. Hey, straight ahead, Tesla. Elon's back?
Maybe. Plus a nice little valuation scoop on one of Elon's other companies. That's next on Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Uncertainty over President Trump's heightened use of tariffs on U.S. trading partners loomed large across the country in recent weeks, according to the Fed's Beige Book survey of regional contacts. Tariff mentions came up 107 times in the Fed report, more than double the number seen in the prior Beige Book. S&P now up 96 to 53.83. That is a gain of 1.8%. The Dow up 433, up 1.1%, and NASDAQ is up 476, up by 2.9%. The 10-year yield 4.38%, with the 2-year currently yielding 3.86%. Spot gold now down $100 the ounce, 32.80, down 3%. West Texas Intermediate crude down 2.1%, 62.31 a barrel. Bitcoin right now up 2.9%, 93,844 on Bitcoin. Goldman Sachs Group's executive pay proposal won majority support from shareholders this morning, despite criticism that the bonuses were excessive, easing concerns over the firm's push to retain top talent as it competes with buyout firms. Goldman Sachs shares up 1.9%. And Louis Vuitton is increasing the price of its Neverfull GM bag in monogram-coated canvas in the U.S. by 4.8% to $2,200 after the implementation of 10% tariffs on goods from the European Union. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Let's talk a little bit about Tesla, if we may. I feel like we've talked a lot about Tesla in the last 24 hours. Stock is rallying up about 8%. We know Charlie's been covering this one as well. Following earnings last night, back with us to continue our coverage is someone we have talked to actually a lot, Tim, over the last 24 hours.
Ed Ludlow is the co-host of Bloomberg Technology on Bloomberg TV. He joins us from our San Francisco bureau. Ed, you said we should wait until the call to really get an understanding of what Elon is thinking, of what the company is planning to do for the next few months, and we certainly got that yesterday. Would you say the biggest news has to do with the attention that Elon is going to spend doing government work versus coming back to Tesla on more of a full-time basis? What would you say?
Yeah, it was the only statement that anyone was interested in or that he could have made to move the needle, and it's the driver in the market right now. There's a lot more for us to unpack, but he literally said starting next month, the month of May, he will dial back the amount of time he spends at the Department of Government Efficiency and reallocate time to Tesla. And that was really reassuring to many investors. There are lots of smart people, by the way, many of which listen to your program, I'm sure, particularly in Washington, D.C., that would say, hold on a minute. We knew that he'd stop doing that in May because of the 130-day limit on special government employees. So to many people, it wasn't a surprise, but the stock reaction is extraordinary, of course.
How do folks know, and there was a lot of little concern going into this from some observers who said, well, I'm concerned when he leaves the government or does a more of a less full-time basis at the government, he's going to be spending time on XAI rather than on Tesla. That seems to be where his attention is. How do we know it's going to be Tesla?
And I continue to hear that from sources, right? That XAI is really important to Elon Musk. But you know, the experience of the last 12 hours, I didn't even bother going home last night. When I finished your program, I did the earnings call, and then I just slept in the studio, and I woke up, and we start again in the morning.
You know, I was going to start saying, did you even go home last night? Because I wondered. Anyway, man, you rock. Oh, you're being like Elon. You're sleeping on the factory floor.
I am, of course, joking, but it was a quarterly earning. It was a quarterly earnings report of a public company, and the story is very much about Elon Musk, who's the stated chief executive officer. But in all quarterly earnings reports, the IR team is involved, the legal team is involved, and the finance team is involved. And the language around a rapidly evolving trade environment or policy, changing political landscape, and the fact that Elon had to use his opening remarks to address his return to the company, having focused on Doge. You know, this is all partly process and legalese, right, in the context of earnings. And to answering Tim's question, you know, Musk had to kind of do that, right? And he did. He used the earnings call as the forum to answer a lot of these questions.
Did he answer any questions about the viability of the robo-taxi business, the June start date in Austin?
Yeah, look, lots of people approach this with healthy skepticism. The news was that in June, a robo-taxi service in a very limited way will launch in the city of Austin. Actually, about an hour ago, Tesla posted a video to its X platform, which shows employees demoing the service. It looks something very similar to what Waymo looks like here through a proprietary app. The principal difference is the video shows a Model Y, an existing passenger vehicle with a steering wheel and a safety driver in the front. So yes, they said it's still on track. That was the earnings news. They clarified through this video today. And what Musk said was, of his own volition in his prepared remarks, that it will be the middle of next year, 2026, when he sees Tesla deriving meaningful revenues from that robotaxi business. That's kind of news. It's kind of an update. But also remember that Elon Musk has a track record of making projections on timelines for something to happen. He often misses that date, even though that he gets there in the end.
Is Tesla better having him more involved? Can we just, because it feels like some of the, what's happened is also the political connections. And I don't know if that goes away overnight. So I'm just curious, how does having, go ahead.
I mean, we talked last night, didn't we, about the Trump bump that Tesla experienced in November. The stock gained some momentum on the basis that Elon Musk's close affiliation with President Trump would benefit the company. We also talked about the example of there being a red Tesla Model S parked outside of the White House and the president promising that he'd buy his own one. But that has really faded. It was interesting last night to get phone calls from sources who work at the company saying, he has been absent since January. He doesn't communicate in sort of company-wide memos anymore. But people both credit him as being absolutely crucial. It's in the boilerplate, right, in the regulatory filings about how key Elon Musk is to the future of that company. They have to disclose it as such. But people also talk about his role in key decision-making. He has, over the years, done that. And at the same time, as demonstrated on the earnings call, there are other executives there. It's not as if, the company isn't, working while he's in Mar-a-Lago or whatever. There are people there who are deeply experienced, but it all comes down to key man risk, and Elon Musk is, in Tesla's context, the definition of key man risk.
Hey, one more on Tesla, and then we want to get to that XAI scoop, or Neuralink scoop, rather, that you have.
Sure.
Ed, but, you mentioned a lot about China yesterday when we got the statement before that call started. You had a lot of questions about the China business, competitors there, costs there. Were any of those answered yesterday?
No, not really on the earnings call. One thing that I guess we learned about is why Tesla was more exposed in the tariffs context on the energy side of the business. And very simply, the answer is that in the context of the EVs they make, particularly in America, the cylindrical battery cells that go into the pack also originate from North America, some of them from Korea and from Japan. But on the energy storage business, the LFP different format battery cells that go into the energy storage packs, basically 100% come from China and CATL. So that was interesting to understand. And beyond that, the conversation on tariffs and trade on the call, as opposed to the earnings deck, was very much about how Tesla is better insulated than its peers in the automotive context. Beyond, no politics, though, not really. Yeah.
All right, we want to get to a story to...
You want to talk brain implants. That's what you want to talk about.
And there's I could use one right now. And an Elon connection. You and Jillian Tan out with a story about Neuralink and a valuation and a fundraise. What did you learn?
Yeah, so I think that they're trying to raise about $500 million at a post-money valuation of $9 billion or a pre-money valuation of $8.5 billion. It would be a jump from what we understand was the last big round at the end of 2023, where the company was valued at $3.5 billion. Neuralink is one of many players that are doing variants of different technologies of brain implant, right? And they are pending full approval. They're in sort of clinical trial phase with trial patients. And the R&D and growing the business and bringing in the talent is capital intensive. They have a very sort of creme de la creme list of investors, and I think that's the sum of what you need to know.
Great stuff. And a full write-through is also on the Bloomberg and at Bloomberg.com. Ed Ludlow, thank you so much. Go and get some sleep, or just get some sleep, whichever.
He's got a little kid at home. There's no sleep. Regardless if he's at the office or at home, he's not getting sleep.
Ed Ludlow, co-host of Bloomberg Technology, coming up an update on trade and stocks on the move. This is Bloomberg.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, folks, we're heading into the final hour of trading on Wall Street. Right now, we're looking at a market with the S&P definitely off its best levels of the day, up about 1.7%. The NASDAQ 100, a gain of about 2.5%, but again, not as risk-on as we were earlier in the session.
Yeah, we're actually seeing pretty much half the industry groups in the red, including consumer staples leading losses. Energy down, real estate down, utilities and materials are down in the S&P 500. But information technology and consumer discretionary and communication services, aka mega cap tech, driving the trade higher.
Yeah, a lot of it right out of headlines out of Washington and what's going on with U.S. and China relations. So something we continue to track. Let's take a look at some stocks on the move this day. With us is managing editor for Bloomberg Markets Live blog, Christine Aquino, back here in studio. Where do you want to start?
Let's talk about Supermicro. I mean, biggest beneficiary of those seemingly more cordial, shall we say, headlines between U.S. and China overnight. We did
We've had a lot of conversations about like the back and forth. It's hard to say, but we shall see, right?
Yeah, exactly. And you know, to your point, Carol, that's probably why we are seeing some of that pullback in the optimism in equity markets generally, and you can also see that in super micro, right? It's up less than 10% now, just 9 and a bit percent. It was up as much as 14% earlier because we did get, throughout the day today, Treasury Secretary Bessent commenting on the potential trade deal taking longer, perhaps, than investors are expecting, and also the fact that supposedly President Trump has not made any unilateral concessions to China about lower tariffs. So a lot of uncertainty still.
We spoke to Brendan Murray at TradeZar, and he put it in he had a really interesting view. I'm just going to repeat what he said because it really stuck with me, Carol.
Yeah.
The president's negotiating with himself at this point.
Yeah.
Because it doesn't seem like there's a back and forth with the U.S. and China.
There's no real negotiating going on at this point, right? There's no people at the table necessarily having that conversation, right? President Xi has been very clear. Let us know kind of when things are more respectful and calm down. And we have some steps to take to get there. The other thing is, if it's going to be a comprehensive trade deal, as we keep hearing from the Secretary of the Treasury, Bessent, that this is a couple years in the making. So, folks, sit down,
strap in,
get a good drink,
and
get
like
ready.
phase 1, phase 2, sort of like what we saw in the
phase
first Trump
10, phase
administration.
20.
Who knows?
Yeah. Let's get to end phase. What's going on with that one?
Yeah, well, end phase on the other end of the spectrum in terms of kind of the impact of U.S.-China trade tensions. So we did get results from them yesterday. It's a solar and storage provider, and shares fell to the lowest in almost 5 years because it said that it sees about a 6% to 8% hit from those tariffs should they be imposed permanently, specifically on battery imports from China. So this is interesting because it's one of the first disclosures that we've gotten on the tariffs impact from solar or that is a harbinger of things to come. If the situation between U.S. and China doesn't improve, then we could potentially be seeing a lot more of these.
What's fascinating is yesterday we saw the solar names actually pop higher and rally on tariffs being imposed on imports. And so that was considered good for the domestic solar industry, but certainly a different trade today.
Yeah, definitely a different trade. I guess it really just depends on where you are, right, in terms of the supply chain and your exposure to that. But it also, I think, more broadly shows like just how much of a chokehold all these trade and tariff headlines have on risk sentiment and stock markets at the moment.
Absolutely.
Tesla. All right. The one that we have been
talking about
a lot, but also because we got a little more color on the call yesterday from none other than Elon Musk. Tesla popping into
Wait, Elon called you?
He didn't call me.
Wait.
He was on the earnings call.
I thought you tell me everything.
After he said,
at least at work.
I might not be on all earnings calls, but he's been on all earnings calls since he said that.
Just checking. Okay, go ahead.
Shares popping today.
Yeah, shares popping. We got to talk about this, right? Because it is a bit of a head scratcher. I mean, that earnings result was just unequivocally negative. It's the worst quarter in years. Company missed its top and bottom line estimates. It trimmed its spending plans, but we're still seeing shares up about 8% at the moment because Elon Musk pledged to retreat, quote, significantly from his U.S. government work to concentrate on the company because his work with Doge is supposedly, quote, mostly done.
Well, we knew because of his status as the special government employee, his work would come to an end at some point. And we know the number of days. So as Ed pointed out, this shouldn't be a surprise to a lot of people. One thing that
It had to happen.
It had to happen. We knew that was coming.
Unless he, all of a sudden, becomes a government employee.
I don't see that happening.
Not
Can you
happening.
imagine disclosures and the
little badge.
Yeah.
I'm here.
But one thing that I thought was interesting about this is we knew, this shares of Tesla starting around right ahead of the election when it looked like Trump was going to win, they started to move higher, and they've given up most of those gains since then. But that was when people knew he was going to be a government employee or working with the government and working at Doge. So they were rewarding that, and then they're rewarding him moving away too, which I think is just an interesting change in the narrative.
Yeah, it is very interesting. I suppose now that we've gotten a little bit more of an input into what does that mean exactly? Elon Musk having a government position, and investors have come to see, okay, that probably means his attention is going to be divided between his government work and Tesla. That's probably not good for the company.
Maybe Neuralink, XAI,
exactly.
the boring company.
To be fair, his attention's
His kids too.
He's got a ton of kids.
Yeah.
Takes a lot. I'm just going to say. Christina Aquino of Bloomberg, thank you so much. All right, for more conversations, check out our new Stock Movers podcast, 5-minute episodes, winners, losers, on Apple, Spotify, wherever you get your podcasts. For those watching on TV, the close is coming your way in just a moment.
Oh, we got Mark Bitzer from Whirlpool coming up on our program. That's next.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. There was a planned meeting in London today on ending the war in Ukraine, but it was scrapped at the last minute. Top U.S. officials didn't show up. In India, J.D. Vance said the administration's patience is nearing an end.
We've issued a very explicit proposal to both the Russians and the Ukrainians, and it's time for them to either say yes or for the United States to walk away from this process. We have engaged in an extraordinary amount of diplomacy.
One aspect of the plan was immediately rejected by Ukraine's president. Linda Kenyon has more from the White House.
The president, referring to reports that Ukraine will not legally recognize the occupation of Crimea, says, quote, that's very harmful to peace negotiations with Russia. In a post on Truth Social, the president added, quote, it's inflammatory statements like Zelensky's that makes it so difficult to settle this war.
Investors on Wall Street got some good news today from Treasury Secretary Scott Bessent. CBS's Kelly O'Grady.
He mentioned over 100 countries have come to the table with either a willingness to negotiate or a proposal. We haven't seen concrete evidence of what those trade deals would look like, but that number does keep growing.
Bessent has worked to calm economic turmoil as negotiations continue over the president's tariffs. In Rome, the wait to view the Pope's body is hours long, but those gathered there are grateful.
They taught us all how to be Christians and to be human, and that's what we are so happy about. So we'll follow him. And we want Pope Francis II now.
The funeral will take place on Saturday. The nation's birth rate is still near a record low. Correspondent Michael Wallace has that.
The CDC says births increased by just 1% last year from 2023's record low.
It's a combination of the economy and also young people wanting to wait until they get their lives in order before having kids.
Dr. William Fry, a demographer at the Brookings Institution, says there will be fewer younger workers to support the aging population. President Trump has suggested a $5,000 baby bonus, but Fry says we need a child tax credit like we had during the pandemic.
Where we guaranteed families amount of money each year.
Michael Wallace, CBS News.
A wildfire in Ocean County, New Jersey continues to burn. Evacuation orders for thousands of people have been lifted, but the fire's just 30% contained and thousands of acres have burned. Forest Fire Service Chief Bill Donnelly.
As we continue to get this under full control, the expectation is that that number of acres will grow and grow in a place that is unpopulated.
There's no rain in the forecast until later this week. On Wall Street, the Dow is up 417 points. This is CBS News. It's a day of tryouts for dancers in New York, as Stacey Lynn reports.
More than 1,000 dancers from 45 states and 34 countries came to Radio City Music Hall on Tuesday to audition for the iconic dance company, celebrating its 100th anniversary this year. Aspiring rockette Bailey Davis came from Indiana.
In the 100th year, it would absolutely be a once-in-a-lifetime opportunity.
Amelia Pace is from Brooklyn.
I've come to the Christmas Spectacular my whole life, and I knew I always wanted to do that.
Last year, only 17 new dancers got a spot on the legendary Kick Line. Stacey Lynn, CBS News.
The cicadas are poised to appear this spring, potentially bringing billions of bugs to neighborhoods near you. The brood that emerges every 17 years will be the only group this year, so there will be fewer cicadas around. Last year, multiple broods emerged at the same time. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are less than an hour away from the closing bell on this Wednesday. Definitely off our best levels, meaning our highest levels of the day when it comes to the U.S. equity trade. We're going to get into the numbers in just a moment. In the meantime, we're going to talk about, of course, equities. We're also going to talk about the bond market with a favorite guest of ours. We're going to talk rates, too.
I'm just going to say it's Katie Kaminsky.
It is Katie Kaminsky.
Yeah. We're not going to, I don't want to give too much of a tease.
Why?
Well, I want people to know Katie Kaminsky's coming up. Also,
she's really good. We love talking to her. How about that?
Hey, we're joined also by Whirlpool Corporation Chairman and CEO Mark Bitzer. We've got a lot of questions for him about supply chain, tariffs, prices, manufacturing,
we have
consumer.
Talked to him through so many different cycles.
He's very candid. He's very candid. So we're looking forward to that conversation. Oh, they're also reporting earnings after the bell today.
Yeah, so we're going to get to that. We've also got a Tesla investor and owner, Ross Gerber. He's going to come back with us. Looking
Carol,
forward to
going off script.
I know.
You just got to throw that in.
Maybe like Neuralink got in my brain. I'm like, it's working. It's working.
It's not working. All that and more coming up over the next 2 hours right here on Bloomberg Business Week. Charlie Pellet's following it all. Hey there,
Hi,
Charlie.
thank you very much. And here's what's going on. You mentioned Whirlpool up 0.9% ahead of after the bell earnings. We got you covered on that. The Dow, the S&P, NASDAQ solidly in the green right now. S&P up by 1.7%, have been up as much as 3.4%. On media reports that the U.S. was considering lower levies on China. The Dow now up 400, up 1% again. The S&P up 1.6%, keeping it all in context. NASDAQ up 2.7%, up by 437 points. The 10-year yield, 4.38%. The 2-year, 3.85%. Gold is now down 2.8%, $32.85 the ounce. West Texas Intermediate crude oil down 2.3%, $62.19 a barrel. And Bitcoin up 2.5%, 93,483 on Bitcoin. After earnings, Tesla up by 7.1%. Yes, Ross Gerber coming up on Tesla. Alphabet reports tomorrow. Alphabet ahead of earnings is advancing as well right now. We got Alphabet up by 2.4%. The Bloomberg Mag 7 Index up 3.9%. As for the broader earnings backdrop, specifically among big tech, Amy Kong is a partner at Corient Capital Partners, and she was a guest on Open Interest.
Don't forget the Mag 7 companies have not yet reported, and that's slated to happen later this week into the coming weeks as well, and that certainly could be, again, a trigger in terms of those earnings estimates coming down a little bit more.
And again, among Mag 7 names right now, we got Microsoft up 2.4%, Amazon up 4.9%, Apple up by 2.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Really do appreciate it. As Carol mentioned, we're focused on the stock market, the bond market. Earlier, the S&P 500 rallied as much as 3.4%. These were off of media reports. The U.S. was considering lower levies on China. Then we saw stocks pair gains after Treasury Secretary Scott Bessent cast some doubts on a timely resolution on the U.S.-China trade war. We want to get into what's happening in the bond market because we are seeing long maturity Treasury yields fall, at least felt earlier after the president allayed fears that he would fire Fed Chair Jay Powell. A lot to unpack here. Fortunately, we got Katie Kaminsky with us. She's Chief Research Strategist and Portfolio Manager at Alpha Simplex Group. She joins us from Boston. Katie, it's been a bit since we spoke to you. There's been a lot happening when it comes to the bond market. So we wanted to get your view on really how you're thinking about this asset class in an environment where it's not necessarily behaving in the way that it typically behaves when there's a sell-off in equities.
That is such a good question. It is the most important thing to look at this month. If you look at what happened, equities were down and you didn't see bonds rallying in response to such an extreme event. And to me, this is a suggestion that the market is much more concerned about sort of the vulnerability of U.S. assets, but also the potential for inflation. So both of those narratives are key here. And that means that bonds are just not behaving like the safe haven asset that we love, but gold sure has. So who knows? It's definitely something to note.
Yeah. How do you make sense of that? Like, you're someone who's watched this. First of all, the bond market, when it's not acting like it's supposed to. Like, do alarm bells go off in your brain and you're like, wait a minute?
Oh, definitely. Because, I mean, if you think about the typical narrative of this type of move, when you have such a large risk off, trade like we've seen in the last few weeks, although it has been volatile, you often think about the sort of where do you go to find safe haven? And that's usually fixed income. And that's not the case if you think there's a probability that this type of risk-off move could cause dumping of U.S. assets or a lack of trust in sort of U.S. treasuries. And that's what the market has been concerned about. And we've definitely seen some of those signals, albeit days like today and the last couple of days, you're seeing some retraction of that concern. You're seeing a flattening of the yield curve, which would kind of say that people are a little less concerned about that. But it is definitely something we're going to have to watch because bonds are just not behaving how we would think.
Do you think the U.S. is losing its status as the haven, as the safety play, as the central bank to the world?
Well, I mean, that is a clearly important narrative. I mean, look how much the markets have moved based on the independence of the Fed and sort of concern over that. The real concern as well is that when you have flows out of U.S. assets, that they don't get recycled back into U.S. treasuries. And so the concern with that is that we're just losing some of that safe haven status. And it's still too early to tell, but the early indications in the market suggest that we should worry about it and think about it.
You know, it's funny. I think about, Katie, for such a long time in terms of U.S. equities, we talked about TINA, right? There is no alternative. And so money just kept coming into the U.S. equity story and markets. So I feel like, too, as you say, with the ultimate safe haven, U.S. Treasuries, that there was no alternative. Is there realistically, though, an alternative that I understand there are that might give you higher yield but I mean, with the same security and dependency that the U.S. Treasuries have, is there an alternative?
Oh, I forgot about TINA, but yeah, I mean,
TINA wasn't that long ago.
I love that. It wasn't that long ago, but it's been a busy month. But yeah, that is a really good question, and that's why I think if you look at the only place people have run to is gold, which and that has been such a big story because there's just people don't know what that alternative is yet, and there's still questionability of whether or not treasuries could be more vulnerable, and so I think we're going to have to really. I don't know the answer, and I think the market doesn't know the answer. So at this point, the alternatives aren't clear, especially in a world where inflation could be an issue. Definitely.
So the whipsaw, the back and forth, is there a point, this is something we talk about like with our Gina Martin Adams in terms and other market strategists and like yourself, where there's a point where there's just so much back and forth that investors are like, I'm out, and there's long-term implications. I don't know, help me in terms of the markets here, the treasury trade. Is there a point where global investors truly say, I'm out? And what is that? Is it Fed Chair Jay Powell being removed? Is it the constant back and forth? Like, what is that tipping point where investors are like, I can't do this anymore?
Well, I mean, we have seen those type of actions in terms of speculative volumes.
Yeah.
When you look at signals, signals have really reduced, and generally technical signals have become very muted. And that's consistent with sort of investor behavior as well. I'd say that, even though you've seen a lot of swings, there definitely becomes a point where people just wait. And I think if we get into that situation, it could take a little bit of time for them to get risk back on the table. I think this week is a good example that, there are still people looking for that, recovery. They're looking for sort of potential opportunities, which means that it's not there yet, but a lot of people have de-risked substantially already, and they may not be coming back right away.
Katie, I want to go back to something that you said that you have your eye on, which is the status of the U.S. as this haven, as the dollar as the safety or haven currency, the U.S. Treasury market as one where people can rely on, backed by the full faith and credit of the U.S. government. You said you're watching that status closely, but let's play that out a little bit. What happens if the U.S. does lose its status? What are the implications of that?
Well, it would be massive flow into other assets and potential for dumping of U.S. treasuries. And what that would do is steepen the U.S. yield curve. And that's why we've specifically seen that type of movement, but not an extremity. So I think it's really a question of flows and preferences, and that could be disadvantageous to U.S. assets, depending, of course, on how extreme it would be. We've already seen massive flows to the yen and the euro, and I think as we navigate those trends, if they continue much longer, that will get people concerned.
What about the auctions? We had a 5-year today. We did see demand rising at that $70 billion sale of 5-year notes. How closely are you watching the auctions? What are they telling you in terms of investor demand and still having confidence in the U.S. government?
Well, I'd say, I mean, the auctions have been reasonable, and there's been plenty of demand. So that is a positive sign. Where we see the trends that are more concerning is actually in the market pricing, less so in sort of the demand for auctions, and sort of imagine that, auctions is sort of newly issued treasuries, but there's a lot of treasuries that people are holding. And I think that is going to be a little harder to measure, and that will come out in sort of pricing as well. So I think it's really going to be watching if this theme accelerates more or if it calms down. And we're already seeing that in the policy right now, that there's sort of a backtrack to kind of avoid some of that. So that may be something that they're actually really thinking about, even though they may not be saying that.
Well, that's right. In our last minute, I mean, do you feel like things are calming down, or is it that even the back and forth is calming down a little bit?
I'd say that, people are becoming a little bit, numb to it a little bit, I'd say. But I think if you look at the size of the moves, I mean, 3% moves, I know that it abated some today, are large moves. Generally, I would estimate those roughly as a 3 sigma move for the S&P in a day. We have those every day now. So, so I think there's some of that, kind of people fatigue, uncertainty fatigue. But there is also sort of some backtracking and some positive news that sort of maybe it's not as extreme as I had thought, and that has an ability to kind of calm investors a little bit. But I think it's going to take time.
What's more likely in this last 30 seconds, 10-year getting back up to 5% or going back down to 4 or below?
Oh, I think I'm definitely more of a, more of a bear. Yeah. So I would say 5% seems likely to me at some point, especially if we see inflation prints later this year bigger. And then outside of what people would have liked due to tariff impacts. So that's definitely possible.
5% in 2025?
Possibly. We'll have to see how the CPI moves.
A lot coming at us. Katie, thank you so much, tying it all up so nicely. Katie Kaminsky, she's Chief Research Strategist, Portfolio Manager over at Alpha Simplex Group, joining us from Boston, Massachusetts. That 10-year note right now at 4.37. Shorter end of the yield curve, 2-year note, 3.85. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got 39 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all solidly in the green. However, we are well off session highs. Best level of the day, we had the S&P up by 3.4% on news reports that the U.S. was considering lower tariffs on China. But right now, we've got the S&P up 1.5%, up 80 points, 53.68. The Dow up 371, up by 1%. NASDAQ Composite Index holding on to a gain of 2.5%, up by 403 points. The 10-year 4.38%, with the 2-year 3.85%. Spot gold now down by 2.6%, $32.92 the ounce. Gold is down $88 the ounce, while West Texas Intermediate crude down 2.4%, $62.16 a barrel. And Bitcoin now with a $93,000 handle, $93,260, up by 2.3%. Our Eric Weiner will have a whole lot more on the markets coming up in just a moment. As for the overall market backdrop, Katie Kaminsky is Chief Research Strategist at Alpha Simplex, and she was a guest moments ago right here on Bloomberg Business Week.
There are still people looking for that, recovery. They're looking for sort of potential opportunities, which means that it's not there yet, but a lot of people have de-risked substantially already, and they may not be coming back right away.
Katie Kaminsky of Alpha Simplex. After earnings, Tesla shares are up now by 6.2%. Elon Musk vowing to pull back significantly from his work with the U.S. government and put more focus on Tesla. Again, Tesla surging 6.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. You just heard from Charlie the numbers, about 1.4% to the upside on the S&P 500, so off its best levels of the day. Earlier, it was up as much as 3.4% on media reports that the U.S. was considering lower tariffs on the country. We've got with us Eric Weiner. He's Bloomberg News Equities America's team leader. He's the author of several books, including What Goes Up, an oral history of Wall Street from the Great Depression through the internet bubble and the 9/11 attacks. He joins us here in the Bloomberg Interactive Brokers studio. You walked in, I asked how you're doing, you said, it's been a day. I think it's fair to say
Can't
that.
just say that every day.
That's what I was just going to say. But I wanted to talk to you about a story that you just edited that talks about retail traders coming in and buying the dip. Is that what we're seeing right now? They haven't been scared away yet?
They have not been scared away. And the money, it's interesting because we're seeing different kinds of buying. So the kind of buying we're seeing is actual individuals going into the market and buying individual stocks or buying ETFs. Big flows coming from these guys. And in the story, which by Esha Day, couldn't recommend it enough. There are some really great quotes about people looking for magic in the market and whatever else. But when you look at the broader indicators of like IRAs, 401ks, that looks a little bit more bearish, actually significantly more bearish. What's happening there appears to be people sort of thinking, should I take my retirement into cash? Should I? Yeah.
That's scary to hear.
Yeah. So
after the selling, just saying, had enough.
It's enough, right. Wow. And that is actually the biggest pile of cash we have. So if that turns bearish, that becomes a very different story because that consistently adds to the stock market going up. There's constantly this pressure of buying. Mm-hmm. Other countries don't have that. So that's unique to the United States, and it's part of our market.
Maybe I'm just like naive here, but I thought that in retirement portfolios, people had like target date funds, and you basically don't touch it until you just don't touch it until you retire. Look, you're not an investment advisor. I'm not going to ask you to give advice here, but I didn't know people played with that money.
They do, and so I do not. That is
off limits.
Yes, that is, and you think about it. You try not to look at it. You think about it once a quarter. You adjust your holdings.
Look at it, Carol. Don't look at it.
I haven't looked at it.
Yeah, and it takes a lot.
But I like in my head have like percentages of what's been going on here, and so I don't want to touch it. But anyway, go ahead.
Yeah, and the target date fund thing is important because as you get closer, I'm an old man. As you get closer to retirement, you do different things. You de-risk. You lessen stocks more in stable things. But you do have people who view their IRA or their 401k as a trading vehicle.
Well, and to be fair, we have seen the bond market not do what it's typically supposed to do in an environment where stocks go down. So that could cause some people to maybe freak out.
So how do you make sense of this of someone who follows the markets, right? And you're thinking about the role of retail traders who can be in and out pretty quickly and stuff. Maybe it's not that long-term bet. So what does it really indicate about the markets other than it's kind of a play thing?
Well, what they're buying is the traditional stuff. Well, the traditional stuff being like big tech, and the big names, and those they're like fans. It's like, you know, rooting for your favorite football team, rooting for your favorite baseball team. They're going to buy. They believe in Elon Musk. They're going to keep buying those stocks until they're proven wrong, or until they feel that they're proven wrong. So it's a different kind of mentality. The shifting of retirement funds to de-risking, that's a more programmed move, and that if that is in fact a long-term trend, that actually is troubling.
Does it ever become, if we look at the retail side of this, does it ever become, do we ever get to the point where, and maybe this happened post 2020 and into 2021 when retail really ruled, do we get to a point where retail doesn't have the money to buy the dip?
Yeah, that absolutely happens. The bigger point is that they tend to turn bearish right as the market is ready to turn bullish. It's kind of a contrary indicator if you talk to Wall Street pros. So when they see over enthusiasm among the retail crowd, they kind of get nervous. This would be an indicator of that. But when they start seeing that the fundamentals are strong, growth should be, you know, stock should be moving up, growth is okay, and the retail crowd is going no, that's when actually the Wall Street pros step in and they say there's a contrary indicator.
So, you know, Eric, like I feel like if you want to tell a story, you can find the data points, right? So here I am looking, going back to the end of 2022 to today. We're up 40% on the S&P 500. We're down about 8% year to date, almost 9%. So I think that doesn't feel so bad. But I mean, do we have to think about the last 2 years or prior years were maybe off the charts anomalies, more so? I don't know, like how do you, like when you start playing around with numbers, you know what I mean? You can start looking at things a little bit differently.
There are a lot of ways to thin slice this. The big numbers to me are 2 straight years of 20+% returns. That's rare. And that's the kind of thing where, like, no matter who's president, no matter what the market is, a kind of a pullback would be expected. What's different now is that the political regime changed. And normally that doesn't actually mean all that much, but it really does here. So everybody wants, as soon as, if you take a step back and just look up to the day, the inauguration day on January 20th, or if you look at the day of the tariff announcements, you start seeing a downward trajectory where you see the market reacting to what is going on politically. That's different. So if you were looking at this year and coming in and you're like, you know, it's President X, it doesn't matter who it is, and the plans are just going to be to keep doing what we've been doing, then the market sells off a little bit and you look at it and you say, okay, well, maybe I take some profits here, whatever. But it's not this cataclysmic sweeping up, sweeping down. In that story we talk about, we've had just in like the last 14 sessions, we've had 2% down, more than 2% down days, and 2 or 3 2% up days. Which, like, that's incredible. That's crazy swings. So this is the difference between now and what was going on before, is that this is actually directly related to Washington, and we have no clarity on what's going to come out of there.
All right, crazy stuff as always. Eric, thank you so much. Appreciate it. Eric Weiner, Senior Editor, Equities Americas, joining us here in studio.
Okay, so that's a big picture of the equity market. Let's get to one of the stocks that is making big moves today, and that's Intel. It was higher by close to 8% earlier in the session, up about 5.4% right now. Bloomberg was the first to report that the company is poised to announce plans this week to cut more than 20% of its staff. Ian King was one of the reporters who broke that story. He's Bloomberg News U.S. semiconductor and networking reporter. He joins us from San Francisco. Ian, 20%, that's a big number when we're talking about more than 100,000 employees. What is this going to do for Intel?
Okay, there are a couple of ways to look at this. It's not actually a big number if you look at where Intel is revenue-wise compared to where it was. It's not a big number if you look at where NVIDIA is compared to its revenue levels. So just to go into those numbers, NVIDIA has a third of Intel staff, more than twice the revenue. TSMC, another peer, has 30% less staff than Intel, and again, almost twice the revenue. So this might be, when viewed from a very sort of cold market perspective, a right sizing of the company appropriate to its revenue levels.
Yeah, I mean, I look at the Bloomberg DES page, right? Almost 109,000 workers in total before any kind of cuts. Necessary cuts in terms of the new CEO basically reorienting the company to where it needs to be?
Yeah, I mean, this is our understanding of the thinking behind this plan. As you'll remember, Bhutan was brought in by a board which said, look, you know, we just don't like where we are with products. We're not competitive in the way that we should be. And the thinking behind that is that, you know, Intel had become this organization that was used to leading, to setting the agenda, that wasn't a kind of a hard scrabble sort of, you know, fast-acting company anymore. And when it was put in on the back foot, as it was a few years ago, just hasn't really had the mechanisms to react. So the argument here is maybe we need to get rid of some of those meetings, those management layers to speed up that decision-making and get us back in the game faster.
Can it get back in the game?
Nobody believes that right now. They don't believe the company is going away, but they don't believe Intel can be what it once was.
So stock is up almost about 2.6% year to date, and they do report earnings after the close tomorrow. You know, we know they're trying to kind of find their way forward. So what's key when they report tomorrow that you're going to be watching out for?
Yeah, I mean, there are some short-term things, such as obviously the tariffs that everybody is focused on and the impact that that's having. The understanding there is that maybe we've actually brought forward some demand for particularly the PC market to try to get ahead of any possible tariff impact. So that might actually be a short-term positive. But long-term, Intel isn't really back where it needs to be in terms of competitiveness. So a bit more market share loss in the lucrative market for servers. We don't really have an AI product equivalent to what NVIDIA has right now. So there's no big declines predicted in the near future. If anything, the big declines are probably over if you look at the numbers. But by the same token, the numbers don't indicate that Intel is going to be shooting back to where it was. Remember, it's 30% down on revenue from where it was just a couple of years ago.
Ian, just 20 seconds in terms of other news to watch for, potential shedding of assets or more cuts to employees, like what could come next?
Yeah, I mean, they've already spoken about selling assets. We already know that Altera is going to be sold off. So yes, clearly anything that's non-core is on the block right now, and the CEO has already said that.
Kind of wild, right? I'm waiting for that headline story, either Intel is back or something. I don't know. It's just, I know it's still a big player, but
not what it was.
Interesting. Always appreciate Ian King's perspective. One of the reporters who broke the story. Check it out at Bloomberg.com and on the Bloomberg. He is Bloomberg News U.S. semiconductor and networking reporter Ian King.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing into the closing bell. Coming up 20 minutes from right now, holding on to gains, but the key takeaway right now, we are well off session highs. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Like you said, stocks are in the green, but well off their best levels, with the Dow currently up 324 points, was up 1,200 points. S&Ps are still up 72, while the NASDAQ gains 2.2%. The U.S. 10-year yield is at 4.38%. Gold and oil are slumping, and Bitcoin, that's higher by 2.1%. Among the main 11 S&P sectors, leaders are consumer discretionary and tech. Consumer staples were under pressure, and leaders to the upside in the Dow, Boeing and Amazon, while Procter & Gamble and J&J led to the downside. In other news, Bessent said that a full China trade deal may take 2 to 3 years. And after earnings, Enphase Energy plunged 15%, while Tesla climbed by 8%. Wrapping things up, some of the names reporting after the bell tonight include Chipotle, IBM, and ServiceNow. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we're coming up just about 18 minutes to go until we wrap up the trade on this Wednesday. Another busy day. You heard Bill and Charlie breaking down the trade. We're pretty much bouncing along our lows of the session. Still up 2%.
That's kind of wild that these are our lows of the session.
Because we're still showing gains.
Yeah, 1.4% to the upside on the S&P.
But what's been the swing? Let's just pull it up.
More than 3%.
On the S&P?
Yeah.
Yeah, almost 3.5%, and now we're up about 1.5%. So, yeah, it's still green.
Hey, I want to talk a little tech.
Okay.
Okay. So we got Angela Zeno joining us.
So then we should talk about the NASDAQ 100 being up 2%.
Oh, is that what it is?
I don't know.
Okay. Yeah, Carol Massar coming in with the big assist. Hey, let's talk about this with Angelo Zeno. He's senior equity strategist at CFI Research. He covers Meta, Microsoft, Apple, Texas Instruments, and more. By the way, if you're got your calendar out, pencil sharpened, Apple, Meta, and Microsoft are all reporting next week. TI is after the bell today, so we'll bring those numbers to you as we do get them.
Mm-hmm.
Angelo, before we get to the individual companies, I want to talk about them as a group because you've got this big note out, and you recently wrote that when it comes to tech, you expect the first quarter of 2025 earnings season for big tech firms to be the most challenging in 2 years. Is it just because of tariffs?
So yeah, thanks for having me, Tim. So yeah, I mean, it probably is. I mean, I think there's just a lot of uncertainty out there in the markets right now, and across these core businesses here, across all these names. So I would say yes, it's largely tariff dictated, and the kind of the implications not only tariff is going to have on some of the direct impact for a company like Apple, but also the indirect impact that you could potentially see in areas like digital advertising. So there's a lot of uncertainty clearly that we're going to see here over the next couple of months as we see these gyrations on the tariff side of things, and that's obviously going to have implications to spending patterns across the entire enterprise spending landscape.
Is all of that factored in at this point? Like, do you feel like we've got it in terms of some of the valuations taking a little bit of a beating, and certainly the stock prices taking a beating, like all of it? Like, has some of the concerns, the negativity, whether it's tariffs and what it will do to growth and so on and so forth, has that all been worked in at this point, in your view, or is there the possibility for more downside?
So, yeah, no, I think that's a good question. So I think we've seen kind of the worst in terms of the magnitude of the hateness on some, in terms of the uncertainty. But, we're kind of walking away maybe from the cliff at this point in time. But when you look at valuations here, I think they're obviously a lot more reasonable across the tech landscape and of course, on the big tech side of things. And you look at just a name like Alphabet reporting tomorrow after the close, trading about 15 times next year's earnings, about 14 times on a net cash basis. A lot of that bad news we think is already discounted in it. I think what remains unknown here is clearly what potential downside are we going to see on the earnings revisions here over the next couple of quarters. And at the very least, what we're hoping to hear on these calls is if some of these companies can provide some clarity on that side of things. They may not be able to point to direct guidance over the next 3, 6, 9 months, but if they can kind of point to the potential negative, the downside implications from these tariffs, I think that'll help and go a long way for a lot of these analysts out there in terms of kind of dictating what the pain threshold will be on the earnings revision side of things.
What about when it comes to the data centers and the pullback that we've heard about companies pulling back on data centers? There's been some analyst notes over the last few weeks that have kind of concerned some investors out there. How are you looking at that?
Yeah, I mean, we've definitely seen mixed kind of reports out there. I will say as far as data center CapEx from the major hyperscalers, we expect the 4 major hyperscalers to keep them intact or sustain their CapEx spending plans for 2025. And we've already seen a couple of them allude to doing that. Microsoft has already stated that. We've already heard that from Alphabet, and Amazon's not going to cut if Microsoft is holding their numbers intact. So for the most part, we think this earnings season, what you're going to see is these companies sustain CapEx. Now, that is different than what we've seen the last 2 years, where over the last 2 years, we've seen quarter and quarter again, these companies actually kind of guide to the higher end and actually increase CapEx plans. That's not what you're going to see this time around. And I think as you kind of progress through the year, as you go to Q2 in the second half of the year, there is downside potential, but that's going to be dictated more on the macro side of things. But as long as things kind of hold up the way they are right now, we think they'll continue to spend. It is what's working right now on the AI side of things. And as a result, we expect these companies to continue to spend.
All right, so what are you expecting from Texas Instruments? That's certainly on our radar. Coming up after the closing bell today, stocks as a whole are rallying in today's session, but talk us through TI and what we should be watching out for and how you feel about this one.
Yeah, I mean, as far as semis are concerned, that's probably where the most uncertainty is. I will say, I'd much rather see a company like Broadcom reporting here, kind of one of the better bellwether type names. When you look at a Texas Instruments or an Intel reporting tomorrow night, those are kind of some of the problem areas of the semiconductor market right now. So as far as Texas Instruments is concerned, what we're looking for is what does the order trajectory look like? We started the year in actually a recovery type of mode for Texas Instruments, but clearly when you look at where their core businesses or end markets are in automotive and industrials, there's a lot of uncertainty on that side of things from a macro perspective. We want to see what the company has to say from that. We do think there are some pull-ins, in effect because of the tariffs out there. I think we also want to know what they have to say about China. China's about 20% of their revenue right now. And, some of the tariff news that hit in recent weeks in terms of, China putting tariffs on U.S.-made chips, that is going to be an issue for Texas Instruments. And given that about 20% of their revenue goes there, we kind of need to see if they can circumvent that. Are they losing business in China? It's going to be a big story there. But when you look at China's domestic manufacturing industry, trailing edge technology is an area that they've established very well. And I don't think it's a surprise necessarily that they've kind of announced the tariffs tied to kind of those U.S. chips. And then I think the other thing we want to look out for is CapEx spend. They're kind of in the midst of this massive CapEx spending cycle, about 3 years in, spending about $5 billion annually, about 70% of the way through. It's really hurting their margins here in recent quarters. All that CapEx spend is really going into the U.S. and part of it was to hopefully kind of circumvent a lot of the geopolitical pressures going on out there.
Right.
But given what we're seeing from China right now, that could end up biting themselves. So we'll see.
Good stuff. Angelo, thank you so much. I know it's a busy time for you. Good to get your view on this. Texas Instruments, by the way, up about 3.5% as we speak. Angelo Zeno, Senior Equity Analyst at CFR Research, joining us on this Wednesday. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Nasser and Tim Stenovec on Bloomberg Radio.
All right, everybody, we're just roughly about 7 minutes away from the closing bell on Wall Street. I was thinking about...
What were you thinking?
I don't know. We've got a lot of big tech names.
Were you thinking
coming up
about the
next
Louis Vuitton bag?
That too, but I was thinking about our conversation with Angelo Zeno. And just all the big tech names that are coming our way and how that might change. I don't know. We'll see what they get in terms of outlook. But
today, Texas Instruments.
Yes.
Lam Research.
Yes.
IBM.
Yes.
Just a couple.
Oh, go on.
Oh, Chipotle.
I'm hungry.
I knew you were going to say that. Whirlpool also, we're talking with Mark Bitzer, the chairman and CEO, a little later.
We are, so it's a great read on the consumer. Also, supply chains and all this good stuff. We actually had one of our colleagues who talked about like shopping for a new kitchen on a Sunday, going for appliances.
Yeah.
And saying it was crazy.
That was Eric Weiner.
It was Eric Weiner.
His thought was people are pulling
forward.
ahead purchases,
like nervous about like what stuff's going to cost after the tariffs go into effect. All right.
Speaking of that,
can we get to the most?
There's
two stories. Can we do it?
Yeah, I think we can.
First, let's just start with big picture. Citadel founder Ken Griffin. He has come out and said President Donald Trump's trade war has derailed business leaders' plans to spend the next 4 years focusing on growth. So
So he said that CEOs had been looking forward to a long stint of not having to navigate new regulations. He said this at the Semaphore World Economy Summit. But, quote, unfortunately, the trade war, which has devolved into a nonsensical place, means we're spending time thinking about supply chains. Griffin said in an interview that assessed Trump's term as, quote, mixed so far.
Not the first time that he has criticized the president's tariffs, even though he said he agrees with the president's assessment of the issues that the United States faces. But today, Mr. Griffin, Ken Griffin of Citadel, said Trump's immigration policies and efforts to cut government waste were huge wins for the administration. So there's some things he likes, but right now, nonsensical place is what he's saying when it comes to the trade war. All right, so speaking of the trade war.
That Louis Vuitton handbag is going to cost you a little more money.
I believe Tom Keene says Louis Vuitton.
He spends a lot of time in Paris. I would think that he knows.
He does that for fun. He knows exactly.
No, yeah. I'm just kidding. Hey, this is called the Neverfull?
What?
That's what it's called, this bag?
Uh-oh.
Neverfull GM bag?
If it's Neverfull GM bag.
It's a big tote, says Elizabeth Sedrin. I don't know what this is.
The Neverfull.
Yeah.
I know some of the iconic ones. GM
well, the
bag.
Neverfull GM bag in monogram coated canvas now costs $2,200 on the company's U.S. website. It's $100 more than last week.
Was that
it's a
dissing?
4.8% price hike. Let me see a picture of this thing.
Yeah, it's these. It's these. Like everybody has them.
Yeah,
Like
everybody has them, says Carol Masser.
I know. That's why my mom's
Excluding the two people in this studio who had to look up what it looks like.
I don't have them, but I know what they are. But yeah, so as you said, right, $2,200 on the company's website, $100 more than last week, so almost 5% higher. An analyst over at Bernstein, Luca Solca, writing in a note today that Louis Vuitton has raised its U.S. handbag prices by 3.6%. Said many products didn't see an increase, however, which could indicate that they're manufactured in the United States. They do have 3 workshops in the country. Ooh, okay. I thought everything was manufactured. Where is it manufactured?
I don't know. What I can say is that
Elizabeth Sedrin, where is all this stuff manufactured?
luxury groups, including LVMH, have warned
Yeah.
that they'll raise prices to offset the U.S. tariffs imposed earlier this month. The CFO said last week that she believes the group's brands benefit from pricing power, but there won't be a one-size-fits-all strategy. Price levels will depend on the brand and the category of products.
Hermes International last week did announce, too, that it's going to raise prices in the U.S. as of May 1st to offset tariffs, with details on final pricing still being ironed out. So
we're not talking
Birkin,
about...
You think it's expensive now? A lot more expensive.
We're not talking about eggs and gas here.
No.
We're talking about...
Sorry if we're being facetious.
At the highest end of the spectrum of disposable income.
Yeah.
And I would argue that many people might say there is more room for price increases there because the willingness to pay is higher and people can afford it.
I just recently read a story, I think it was in the Journal, about somebody getting ready to buy like a $20 million apartment, and because of the stock market decline said, backing out. And they were going to buy the furniture and everything, and they backed out. So really good.
What about after today's increase?
I don't know. Are you that like...
I don't know.
I'm in, I'm out, I'm in, I'm out?
The wealth effect. It's the wealth effect.
It's real. All right. Hey, we're going to get real on the market close. Over to our TV colleagues. Closing bell starts now.
Talk a little bit more about the global simulcast that starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Scarlet Fu, taking you through that closing bell with a global simulcast that starts now. Carol Masser and Tim Stenovic in the radio booth. Alex Seal is on assignment today as we welcome our audiences across all of our platforms, including our partnership with YouTube, on a day where we're seeing a relatively strong rally, Carol Masser, for the second straight day.
Yeah, so good news, but we are well off our best levels of the session. But if you're something like a semiconductor stock, man, you are seeing some real big outperformance, up about 4%, off its highs as well, but definitely a big gainer in today's session.
Yeah, but let's talk about why this is happening. Optimism over comments from the Treasury Secretary and the President about progress between the U.S. and China. But is there any there? Do we know exactly what's happening? Do we understand what the trade deal or a trade deal will look like and how long it will take? I don't think we do.
There doesn't need to be a there for now. They just need to be saying the right things to signal to investors that things are not as dire as people had worried. The real focus is going to be on earnings and what the companies tell investors. And there's a Bank of America tidbit about how the ratio of positive to negative comments on macro conditions this earnings season is on track for the worst proportion since 2009.
Yeah, but it's kind of interesting, too. I mean, I did find some encouraging signs. And I know the earnings season's still young, but when you looked at what Boeing had to say, and I know that's more of of a turnaround story, a little idiosyncratic, but that was encouraging. But also what you heard out of Vertiv and GE, Vernova, Otis, Thermo Fisher, and a few others, and AT&T, which, I don't know, is knocking it out the park for some reason. Everything old is new again. In fact, do you know this, Carol Massar?
What?
The #1 performer in the S&P 500 today?
It's a name, yes.
It's a company that makes components for cable television.
And the ticker is APH. It's on my gainers list.
8.2%, front-running Carol Massar there. Let's get right to the numbers as we await a slew of earnings coming after the bell. The Dow Jones Industrial Average higher by more than 400 points on the day, or about 1%. The S&P higher by 88 points, or 1.7%. The NASDAQ Composite closing higher by about 2.5%. And the Russell 2000 holding on to most of its gains on the day, up 29 points, or 1.5%.
All right, well done, Mr. Bostic. Looking at the S&P 500, 361 names, guys, higher in the index.
It's just Romaine to you, by the way.
139 to the downside, 1 unchanged.
All right, taking a look at the IMAP, tech, consumer discretionary, and communication services. Those are the groups that the Mag 7 belong to, leading the way, all up by at least 2%. Your laggards today, those two thin red slices, consumer staples, and energy.
All right, quickly, in terms of some of the gainers, Tesla
Give
up
me a
5.
square pizza, you know, maybe we can do that one.
The grandma's pie?
Yeah.
Love that.
Sorry, or rectangle.
Seriously?
Sorry. Keep
All
going,
right,
Carol. We got earnings coming up.
Tesla up more than 5%. We know the deal. Elon's like, I'm coming back to the office. Top gain name in the NASDAQ 100 and the S&P 500. And let's go to the earnings.
All right, we are getting Texas Instruments crossing the wire. 1Q EPS coming in above analyst estimates, $1.28. The street on average was looking for $1.07. Total revenue in the quarter, $4.07 billion. The street was looking for $3.91 billion. CapEx also coming in relatively in line at about 1.1. And here's your forecast for the second quarter. The company sees second quarter revenue coming in at 4.17 to 4.53. The lower end of that range is above the average of street estimates. And on EPS, second quarter EPS of 121 to 147. The low end of that range is right on the nose of the average of street estimates. You see the market reaction there at the bottom of your screen, up 7.5%.
And the company also makes really clear that they invested $3.8 billion in R&D as well as expenses. They invested about $4.7 billion in CapEx and returned $6.4 billion to owners, presumably through share buybacks and dividends.
Okay, not getting a lot of commentary in the release. We're going to have to wait for the call to get some commentary, but worth repeating these numbers. The bottom line, first quarter EPS, beating estimates at $1.28 versus estimates of $1.07. And then second quarter revenue, that outlook, as we heard, $4.17 billion to $4.53 billion. Estimates are for $4.12. So that beating estimates there. Shares higher right now by about 6%.
You know, what's interesting, too, is we were just talking with Angelo Zeno over at CFR Research, and he said, you know, look to see what they say about China and their revenues, because that's about 20% of their top line numbers. And so whether or not they're seeing any kind of pain, but I got to say, these are really strong numbers.
Yeah.
Investors like it. Sorry, go ahead.
I am curious to kind of see what they say on the conference call. I mean, I was going through the release too. They don't really no mentions at all. At least not in depth of tariffs and trade wars and all the economic conditions. So it'll be interesting to see what they say on the call.
Yeah, doing a search for the word tariff just does not exist. So it's a matter of how they, calibrate their responses. And I'm guessing a very non-committal and cautious approach, given what everyone else has said.
Well, there's a little bit of detail, not much. All of our markets grew sequentially with the exception of a seasonal decline in personal electronics. Seasonal, I don't know what that means. I mean, we do know what seasonal means, but is there something bigger happening there that we could say is indicative of the way consumers feel and the economy? We'll have to wait for the call to get details there.
I just want to mention another earnings if we could. I know this wasn't on our radar, but it's RHI is a ticker, Robert Half. It's a staffing company, and I've been paying closer attention to these given some of the concerns about the labor market and the economy. They did miss on several key estimates in their most recent quarter here. Revenue down about 8.5% in the quarter, and not quite seeing a forecast here, but they do kind of discuss a little bit some of the issues going on in the labor market. So something, a smaller company, but certainly something to pay attention to as we try to get a better read on economic conditions.
Yeah, no, absolutely. I mean, I just think every time a company, though, comes out and maybe is willing to actually make a commitment in terms of her revenue, that's a good thing, because we know that we talked to Gina Martin-Adams, and she said in her whole world of covering companies, she is like kind of amazed when a company puts out different scenarios that she's never seen that. So here we have Texas Instruments talking about the second quarter. Once again, just to reiterate, second quarter revenue of $4.17 billion to $4.53 billion. The estimate is $4.12 billion. So that's pretty optimistic. And again, that's an outlook that that company is willing to commit to, at least at this point.
Yeah, and again, the stock moving higher in the after-hours trade. I want to go back to something you said, Romaine, about Robert Half and that idea that they're pretty much giving us a glimpse into the labor market as well. The revenue was down about 8% versus last year, but when it comes to the parts that really shed light on the labor market, contract talent solutions revenue down 14%, so double-digit percentage drop, and permanent placement staffing revenue also down about 10%.
Yeah, and this is kind of why I like earnings season, because it really does sort of create a situation where companies have no choice but to really put it all out on the line. As I know, we're getting other earnings out from Las Vegas Sands as well, Scarlett, Whirlpool, Lamb Research, a few others crossing the wire. Scarlett, take it away.
Yeah, let's start with Las Vegas Sands. The casino company reporting first quarter adjusted EPS of 59 cents, beating the consensus estimate by 2 pennies. Net revenue for the period was a bit shy of analyst estimates, $2.86 billion. They had a first quarter adjusted property EBITDA of $1.14 billion, slightly higher than anticipated, and they approved increasing their buyback program to $2 billion. So that stock not moving a whole lot right now, up about 0.4% in after-hours trade.
Well, in after-hours trading, Whirlpool shares are up by 1.3%. The company did not change its fiscal year guidance. First quarter net sales coming in just shy of estimates at $3.62 billion. The company sees fiscal year revenue coming in at $15.8 billion to beating estimates of $15.72 billion. First quarter ongoing EPS coming in at $1.70. The estimate is for $1.72. The company still sees fiscal year ongoing EPS about $10. That beats estimates of $9.30. Shares higher right now by about 3.6%.
And we're going to actually have the CEO, Mark Bitzer, on the program right around in the next few minutes here. I just want to point out, too, there is some commentary in here about tariffs, and it's specifically focused on the idea of competition from Asian producers and the idea that there's been a lot of hoarding, if you will, here in the U.S. side of stuff from overseas. They're saying that's complicating factors and a, quote, amplified negative temporary impacts as Asian producers loaded U.S. industry in anticipation of tariffs in Q4. It also saying that the threat of retaliatory tariffs started to impact their business in Canada and in Europe.
All right, so some interesting context. You guys are going to warm them up for us, and then we're going to also talk to the CEO of Whirlpool. So looking forward to some of the commentary that he has to say about his world. Lamb Research, I just want to pop over to that one because that one is also higher in the aftermarket. Third quarter adjusted EPS, $1 a share, 4 pennies better than what the street was expecting. The stock is up about 4.9%. Revenue, $4.72 billion. Again, that's a beat. It's up 24% year over year. Estimate was for $4.64 billion. And margins, adjusted gross margin, 49% versus 48.7%. So again, that's coming in better. And you're seeing, again, that stock pop up more than 4%.
Newmont Mining shares up in the after-hours trade, the largest publicly traded U.S. gold miner here. And if you've paid attention to the price of gold, well, you know how these earnings went. Sales up 25% on a year-over-year basis to $5 billion. EPS coming in at $1.25. You compare that to a year ago where they posted just 55 cents, and you compare that to the average of analyst estimates for the quarter of 93 cents. So a big beat on both the top and bottom lines. Not quite seeing the forecast here, but the big question is how sustainable is this bump?
All right.
They actually just said they remain on track to meet their 2025 guidance. So the headlines continue to cross.
All right, let's also talk about IMAX, the movie company or the movie production company, reporting first quarter revenue, $86.7 million, does beat the average analyst estimate of $83.9 million. And the company is talking about in the release how it's done tremendously well by its global content slate, highlighted by a movie in China, Ne Zha 2, the highest grossing IMAX release of all time in China. It also captured 20% of the strong domestic opening for Sinners. I don't know if any of you guys watched that, but that was a big hit, apparently, for IMAX.
I'm too busy watching IBM shares move higher right now in the after hours, up 5.3%. The company sees second quarter revenue coming in above estimates at $16.4 to $16.75 billion. That beats estimates of $16.28 billion. First quarter revenue coming in at $14.54 billion. That beat estimates of $14.4 billion. It did reaffirm its fiscal year forecast. Once again, shares of IBM higher by about 5% in the after hours.
All right, quick check on Knight-Swift, the trucking transportation company. Total revenue for the first quarter, $1.8 billion. That's exactly what the street was expecting. Also looking, and let me just look at some other numbers. The year forecast still sees net cash CapEx about $570 million to $625 million. First quarter adjusted EPS 28 cents a share. That's a penny better than what the street was expecting. And so stock, we're seeing just a little bit movement, but commentary about what they are moving or not moving around will be certainly interesting. So we'll look out for that. All right, guys. Whew, a lot of earnings. That's a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Tim and I are going to continue on Business Week, and Scarlett will remain continuing there on television. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
A lot of earnings, Carol, and we're not even in like the thick of it yet.
No, and it was really kind of a mixed bag, which I kind of like because, you know, Romaine said something, I think it was last week, that the idea is that when you start to get earnings from different sectors, especially in this environment, kind of love it because you get a good feel of what is going on in the overall economy and whether or not companies are feeling comfortable to commit. We're going to talk with the Whirlpool CEO a little bit later this hour.
Dr. Mark Bitzer is going to be joining us.
Which is a great read on the consumer, a great read on global supply chains, a great read on China as well. We got Texas Instruments that came out. We've seen that stock bumping up higher in the after hours in a big way. The company with their outlook for the second quarter in terms of revenues, $4.17 billion to $4.53 billion. That's above what the street was expecting of $4.12 billion. So we have seen shares of TI definitely taking off in the aftermarket, now up about 6%. Semis as a whole were higher before the closing bell. And so we saw that on maybe expectations that U.S. and China was moving forward in some ways on a trade or tariff deal. And we know that semiconductors are certainly on the president's list in terms of maybe higher tariffs. So there was a little bit of relief, a lot of relief actually, in today's regular trade. But investors moving into TI in a big way here in the aftermarket. Newmont Mining also out with their earnings here after the closing bell. Taking a quick check on this stock, which has been on a tear this year, up about 40%. Right now with a gain, Tim, of about 1.8%.
All right, well, I got my eye on what's going on over at Chipotle. The company just out with results. The company still sees fiscal year new restaurants 315 to 345. That's kind of smack in line with estimates that were at about 337. Shares fell, though, as the comp sales missed. Comp restaurant sales coming in at low single digits. That's for its fiscal year. That's the outlook. The company sees fiscal year comp sales growth in the low single digit range as well, and the low single digit range as well. In terms of numbers here, Carol, first quarter adjusted EPS did beat estimates at 29 cents. First quarter revenue came in just in line with estimates, but first quarter comp sales coming in below, down 0.4%. The estimate was actually for growth of 1.74%.
Right.
And then first quarter operating margin, that was in line with estimates at 16.7%.
Kind of fascinating to watch just all of these earnings, a mixed bag. Whirlpool up about 3.25%. We're going to be talking to the CEO in just a moment. Lam Research is up about 5.5%. This is a company, too, that we know, plays into the chip sector.
Not to be confused with Lamb Weston that
Correct.
plays in the
French fry business.
French fry potato chip business, but French fry business.
Yeah,
you might call them chips in the UK.
And they talked about outlook. Sees fourth quarter adjusted EPS $1.10 to $1.30 share. Folks, the street estimate 98 cents a share. Fourth quarter adjusted operating margin. Again, this plays to the outlook. They're looking at 32.5 to 34.5%. That is better than what the street was expecting of 31.4%. And then also talking about fourth quarter revenue of $4.7 billion to $5.3 billion. That too is definitely way above the street estimate of about $4.59 billion. So you can see why investors are moving into it. I think this plays to what we talked about with Gina Martin Adams, who said that we have continued to see analysts bringing down earnings expectations and outlooks. So maybe too much, and maybe these companies are coming in and saying, wait, maybe it's not so bad. But again, the commentary on some of the analyst calls will be fascinating.
ServiceNow shares are surging, up 7.7%. this as second quarter subscription sales view tops estimates. I do want to talk IBM a little bit because, as we mentioned, IBM just out with numbers. Shares were higher in the after hours, now down about 3% as we speak. I want to bring in Brent Thill. He's Senior Technology Research Analyst at Jefferies. He joins us from the West Coast. He's had literally 6 minutes to look at these numbers. Brent, what is your view? Because at first in the after hours, and look, we have to take this with a grain of salt, but at first in the after hours, investors were happy with what they saw.
Yeah, I mean, it's an inline quarter. 2% revenue growth is not going to blow your socks off, but they are leading with 9% software growth, and that was good. The consulting business was expected to be negative; it was flat. Everyone thought, given what's happening with Doge and all these potential economic slowdowns, the first place he would cut are consultants. So, that business being flat was a little bit better than the street thought. So, cash flow had a really good number, so $4.4 billion versus $2.7 estimate. So, good bottom line, mediocre, in line. I think this has been a story that's just stable, steady. Arvind, the CEO, has done a really nice job transforming IBM into a software company versus just a consulting low margin company. And we like their position. To your point, I think no one is going to see what happened with the tariffs or some of the concerns that are in place in April. So these are all March quarter earnings. And again, I think to your point, you're not going to feel this until the second quarter. And so I think investors are obviously excited that hopefully we get some resolution. But if we do see a slowdown, you're not going to see it in Q1 numbers. You're going to see it all in Q2. And most of these companies are probably not going to guide for it because they haven't seen it disappear out of their pipeline in the last couple of weeks. So we're keeping a close eye on it. But overall, I think just expectations across tech, it just got too bearish. Our conversations with investors, institutional investors, is they just didn't want to touch any of these names with a 10-foot pole, and everything got oversold. And so we're now in a situation where ServiceNow is bouncing, IBM's bouncing, the rest of the industry and tech is bouncing because it's been the most hated group year to date.
Well, what's interesting too, and the Chief Financial Officer, Jim Kavanaugh, saying specifically that about 15 of IBM's contracts with the federal government have been canceled or paused, amounting to about $100 million in future payments. There is that, but they did, I'm just looking here, so they did give, though, a forecast, and they do say, forgive me as I'm looking through. In response, IBM took the unusual step of giving quarterly guidance, saying that sales will be about $16.4 to $16.8 billion in the period ending in June. Analysts on average had projected about $16.3 billion. That they're willing to commit to a second quarter revenue guidance tells you what?
Well, again, this is a highly recurring revenue basis. So I think the more granularity, the better. And I think ultimately every CFO is saying they have to put in a little more conservatism in the guide based on everything that's going on. I mean, no one knows which way is up right now in some of the macro indicators. And so it's, again, I think some of these pipelines are misleading. I think some of these software companies have done a disservice and not been a little more conservative. And so I guess what I think they're trying to showcase is that they have obviously visibility, they have recurring contracts, and they've taken into account some of these changes. So I think IBM's been on a multi-quarter, if not now multi-year, rejuvenation and re-excitement around the software business. And investors keep scratching their head, why does the stock keep going higher? It's going higher because they're cutting out the low margin business consulting, and they're leaning into the high margin software business.
Right.
And Arvind, the CEO, is a software guy. He wants this to be a software-led organization, not consulting, not hardware. And there's an element of AI, and there's an element of quantum computing. Quantum is still a long ways out, but there's an element where you can own that. So, stock is outperformed. It's down a little bit. I think just probably on was it enough? I mean, stock is up 12% year to date. It's massively outperformed almost everything I cover. I mean, almost every stock I cover is down 12 to 20%. So it's been a parking lot in this storm, and I think everyone has felt like, hey, it's not going to blow your socks off either way. It's going to be stable, steady. They're going through a good transformation. and it's a very well managed and well run company.
Yeah.
So that's a safety spot. Does that wear off now as we go back? We get tariff resolution. Is that going to lag on the up? I think the answer is yes. I would much rather own Amazon, Microsoft, a handful of I.B.M. than IBM right here.
And I do just want to point out that the company also reaffirming its fiscal year forecast, so there is that as well.
Okay. Hey, Brent, I'm curious about the move toward more software and services, less so with consulting, less so with hardware at IBM. Given that Arvind Krishna, the CEO, wants to do that and has been doing that, who are their biggest competitors out there that they're selling against?
Oracle, Microsoft, all the hyperscalers, Google, Microsoft, Amazon. So like it's, I think the way you think of it is, IBM is very big into open source, right? And no religion is right, but there are multiple religions. Same thing in software, right? There's closed source like Microsoft, and then there's open source like IBM. And IBM firmly believes in an open source world. And so a lot of big enterprises believe in that world. And I think IBM has a really good perspective. They also do very well in regulated industries, government, financial services, where you have a lot of big, heavy on-prem workloads, right? They don't move them to Amazon or Google public cloud. And so they work with some of the largest organizations out there. So they tend to thrive really well in that environment. And so, the competitors, on the cloud side are Amazon, Microsoft. On the traditional enterprise side, it's Oracle, and others in that category. But I think, what IBM has said, and I think this is a good strategic change, is, look, we can't do everything with our own portfolio. We'll sell Salesforce, we'll sell Adobe, we'll partner. We want to lead with our software, but if it doesn't work for you, we'll lead with others. It's like a contractor. Like, no one should just use their own wood. Like, I'm going to use someone else's wood in Windows, and this window from Anderson might be better than this window from Marvin. So, like, let's sell it all. And that helps their overall credibility as being independent, driving the consulting business. So it's I think it's a good strategy. Is it the one, again, that is going to be hyper growth and the excitement in the world, the way the world is going? I don't believe so. I think still, when you look at the growth rates inside Microsoft growing double digits in software and growing Azure at 30, Amazon still growing their AWS cloud business and in the high teens. These are way more exciting growth businesses. So, again, kudos to IBM. I'm a huge believer of how they've architected this.
Yeah.
From a stock perspective. I just think there's way better ways to play offense, especially in a world that's gotten hit hard in tech. You're going to make a lot more money owning some of these other names in tech.
All right, Brent Thill, thanks so much for joining us on IBM. Brent Thill is Senior Technology Research Analyst at Jefferies, joining us from the West Coast.
All right, just looking at all of the earnings after the close, Whirlpool, shares of the company are up almost 5% here in the after hours. We've been breaking down the numbers. The company maintaining its full-year financial outlook despite uncertainty over global tariffs, saying their long-term impact will benefit its position in the U.S. home appliance market. We are so delighted to have back with us Mark Bitzer. He's the CEO of Whirlpool Corporation. He joins us from Michigan. Mark, it is great to have you here with Tim and myself. How are you?
I'm doing well. Thanks for having me back.
How is the environment?
Well, obviously you saw in our earnings release, we're, despite everything else going on, we're pretty pleased with our Q1. We're basically, I would consider our business largely on track. We hit the EPS pretty much in line with consensus. Our organic revenues were up 2%, almost 6% margin, which puts us on track to our full year guidance, and we're reconfirming guidance. So, obviously it's not all euphoric, but given everything else going on, I think we should feel pretty good about being on track in the current environment.
How would you describe the U.S. consumer right now?
Yeah, obviously, it's been a lot of volatility also on the consumer side, and I think if you want to say so, we're probably a little bit the canary in the coal mine when it comes to consumer confidence. And the reason why I'm saying this one, every day, many companies have a big order pipeline. Our orders are pretty much 7 days. So I see it pretty fast if a consumer orders something or not. And we saw actually a very healthy consumer sentiment following the election pretty much through January, mid-February, and then we saw a clear deterioration of consumer confidence, in particular on the discretionary side of demand. And I think that continued to also in Q2. So we see right now the consumer probably lacks confidence about their financial future and they're holding back discretionary purchases.
How does that compare with where consumers have been during your tenure at Whirlpool? Because we've spoken to you quite a bit over the last few years, through ups, through downs, through relatively calm periods. How would you describe the consumer right now relative to where the consumer has been during your tenure?
Yeah, Tim, I've been 26 years, so probably don't have enough time to go give you all the ups and downs.
But is it better than but that gives us a great view. Is it better than the financial crisis? Better than the dot-com bust? Better than COVID?
You know, how should I put? From an economic perspective, it doesn't, not from a human perspective, from an economic perspective, I think there's a lot of similarities to what we saw in the early days of COVID. And what I'm saying is on consumers, it's just, there's a, everyday new messages which don't necessarily help consumer confidence. So from a pure consumer confidence perspective, you just want to have stability in the message. I think consumers can deal with good or bad news. It's just the everyday changing news and the uncertainty, which neither helps business investors or consumers. And I think, so the drop which we've seen kind of in the course of 6 weeks, yeah, that was probably among the biggest drops I've seen. Now, hopefully at one point it will also come back up again. But right now the drop was pretty fast and pretty drastic.
So we love talking with you. We've gone through so many cycles together. And I'm just thinking of those who are watching and listening to Bloomberg Business Week on this Wednesday. I am curious about your supply chain. Like, we are all getting a great lesson, right, in global trade, global supply chains. Tell us about your supply chain. And how the U.S., China, or just the U.S. tariff trade war is potentially impacting you or making you change it.
First of all, Carol, I want to give you credit, but it took you to question 3 to raise the word tariff.
I'm trying.
Kudos to you. Kudos to you.
It's not easy.
And obviously, there's a lot of moving parts at play. Ultimately, it comes back to we are kind of the only and last American appliance company, and we produce 80% of what we sell in the US. And of what we produce in the US, more than 80% of our parts are sourced in the US. So we are a domestic producer. I know a lot of companies talk about reshoring or onshoring. We never left, okay? And that's a big difference. So as such, even though we're also faced with some headwinds, in particular on components, etc., ultimately, we will be a net winner because we're a domestic producer. And in this case, and this is different from other industries, there's capacity. We have enough capacity in our factories to fill them. And I appreciate other industries, it may take some time, but I think ultimately, and we all don't know what the final picture of the tariffs is, but something will be there. And we do see us benefiting from this one.
There's a couple things I wanted to ask you. Like, we just have a headline crossing, and there's lots of headlines that are constantly coming at us. And this one is from the FT that the president is going to exempt car makers from some U.S. tariffs. How do you want to see this trade war play out? Because I'm assuming that some of these tariffs help you domestically.
Well, and again, I think that probably needs a little bit of explanation. So Carol, actually, we're not asking for exemptions. We're not asking for tax subsidies or gifts or handouts or whatever. There are right now in the pre-existing so-called 232 and 301 tariffs, there are loopholes which hurt us, and they structurally benefit Asian producers. And it's put in simple terms, because of the 232 tariffs, I pay in US for steel 2 or 3 times more than Asia steel. And any component which I can't get in the US, like a LED panel, I pay tariffs. So if the same product is produced in Vietnam or Korea, they don't have to pay the tariffs on steel. They don't have to pay the tariffs of components. That difference is big. It's about $70 per product. So put that in retail price, that basically means $150 different retail price. So all we ask for is just close the loophole. We're all in support of having a strong US-based steel production. I think we all agree it's important. Just close the loophole. That's all we ask for. So we don't ask for special treatment, just close the loophole. Take the disadvantage away. Again, I'm not looking for an unfair advantage. We're just looking for a level playing field. And then when we can compete very well.
So we're talking, of course, with Mark Bitzer. He is Chief Executive Officer at Whirlpool Corporation, joining us from Michigan. One thing I want to ask you, what you have learned about manufacturing in the United States, is there a lesson or something, a message you'd like to share with other folks who are saying, I can't manufacture in the United States?
And again, it's, Carol, as you can probably tell from my accent, I have a dual citizenship, American and German. So to sit here and say I'm staying here for patriotic reasons is probably not credible. U.S. production can be working well, and I'm proud of our 10 strong factories in the U.S. And if you go to a factory like in Clyde, Ohio, where you have 3 generations of factory workers, these are proud people who have worked very hard. So I know there's now a lot of jokes about U.S. manufacturing. You can produce in the U.S., and there's a very good skilled workforce which you can have, as long as we don't harm ourselves with kind of issues which make production more difficult in the U.S., like steel price and component costs. So I know some people are hesitating about moving back to the U.S. We have been producing in the U.S. for 114 years with success.
So, I'm curious about, since you already produce here in the U.S. and you have 80% of the production that goes to the U.S. actually being made here, plus you source a lot of the parts here, you're relatively unaffected by tariffs. Would you say that the tariffs that the Trump administration has proposed or is even putting on have been a net benefit for your business?
It's again, so far there's more announcements than already actually in place. So far what is in place is the 232 and the 10% tariffs. But I go back to, and I know there's a lot of talk about what the previous Trump administration did, the 201 tariffs in 2018, because I know there's a lot of talk about did they raise prices or not. If you now today look back, these tariffs were put in place in 2018 and where we are today, washer prices today are lower than they were in 2014. So tell me one product category which has lower prices than 2014. And compared to 2018, there's 2 more factories producing washers in the US. So from that perspective, what the prior Trump administration did, actually in our industry worked. It brought new production and the prices did not raise. Now, there's always some moving parts as you go through this one, but it worked. Now, that may be different in other industries, but I think I know our industry pretty well. You add production capacity, it ultimately will benefit the consumer.
Does the risk, though, of declining U.S. consumer sentiment as a result of rising prices in other categories and concerns about uncertainty moving forward, does that weigh to a greater extent than the benefit that you get from tariffs as a U.S. producer of products?
Yeah, I think it's a fair question. Of course, in the short term, there will be, call it wobbliness along the way. But I think, as I mentioned earlier, consumer confidence can drop fast, but it can also increase pretty fast. We've seen that in Q4. So I would say, what I describe on a structural capacity, these are long-term effects. You don't build factories on wheels, but you build them for 30 or 50 years.
Yeah.
Consumer confidence moves within a quarter. So I think even though there may be some volatility in consumer confidence, I think the long-term benefits will clearly outweigh the negative short-term consumer sentiment.
Mark, you definitely have a global perspective. I think there's some concerns, though, that the longer this trade back and forth, especially between the United States and China, but really between the U.S. and the world, that there will be long-term damage. How do you see it?
Well, it's again, I can speak more for my industry. I think ultimately what the current administration is trying to do in our industry, I support, of course, because we're a U.S. producer. I think the most important thing, and that is not only for our industry, people just want to have predictability, okay? If you have pretty much every day a changing problem definition, that just makes it hard, because you don't plan industrial production, you don't make industrial decisions if you don't know if that assumption is true tomorrow. So I think everybody will deal with whatever it is if they know this is now, that's a picture and it's going to be stable and people can count on this one. So I think it's more stability and predictability more than anything else, which I would be hoping for.
You mentioned that much of the sourcing that you do for the U.S.-based production is actually domestic sourcing. Still, I imagine there are components that are made outside of the U.S. Do you anticipate any supply chain issues as a result of what we've seen happening?
Yeah, and it's a little bit, and part of that is today our disadvantage because there are, as you point out, some components I can't buy in the U.S., like an LED panel for a washer and that kind of stuff. So today we have to pay tariffs while anybody producing Thailand, Vietnam doesn't have to pay tariffs.
Right.
I think over time, I would expect that for the vast majority of these components, over time, there will be supply base either in the US or in Mexico. And we see already some early indications. It will take its time, in particular in the electronic side more than anything else, but more of the mechanic parts like motors, etc. I think it will be quickly resolved.
All right, I just want to know, have you created a dishwasher that my husband and I don't have to argue over who's going to load it and unload it? I just want to know, do you have one like that, a robotic one that actually unloads and unloads? Have we gotten there?
Yeah, well, if you have a patent, let me know, and we can hire you as an engineer. First of all, I pride ourselves. We have a best dishwasher with the biggest capacity in the industry. Unfortunately, it doesn't load itself. I feel the same pain every day at home. Not every day. At least I'm accused of that every day.
Hey, listen, one last question. Do we have to be worried about a global recession? Is that anything that's on your radar, just real quickly?
I mean, again, that's why I said, Carol, earlier, it feels a little bit economically to step back to earlier days of COVID and whatever else.
Yeah.
It's just an uncertain outcome. I think right now the odds of a recession have increased. I'm not quite sure we're all the way there. It depends a lot what happens in the next 2-3 weeks in terms of business predictability. But I think we're living with an uncertain outcome, and that's what our job is to manage towards that.
All right. Well, when I get that design for that dishwasher that loads and unloads itself, I'll let you know. Mark Bitzer, Be Well, CEO, Whirlpool Corporation. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with the developing story. Las Vegas Sands is dropping out of the contest to develop a New York City area casino. Stocks higher today. In fact, the S&P 500 index had its first back-to-back two-day gain since early April. The Dow, the S&P, and NASDAQ all advancing. S&P up today by about 1.7%. At the best level of the day, however, the S&P had been up by just about 3.4%. Stocks gained after signs emerged that President Trump is rethinking his aggressive stance on trade and the Fed. The Dow today up 419, up 1.1%. NASDAQ up 407, a gain there of 2.5%. 10-year 4.38%. Spot gold today down $93 the ounce, down 2.8%. 32.86 on the precious metal. West Texas Intermediate crude down 2.1%. 62.33 a barrel. And Bitcoin today up 2.8%, 93,764. After the bell, IBM did report better than expected quarterly revenue and profit, but shares now selling off by 5%. TI gave a better than anticipated forecast for the current period due to improved demand for industrial and automotive components. As for the broader tech earnings backdrop, Angelo Zeno is senior equity analyst at CFRA Research, and he was interviewed right here on Bloomberg Businessweek Daily.
They may not be able to point to direct guidance over the next 3, 6, 9 months, but if they can kind of point to, the potential negative, the downside implications from these tariffs, I think that'll help and go a long way for a lot of these analysts out there in terms of kind of dictating, what the pain threshold will be on the earnings revision side of things.
Angelo Zeno of CFRA. After the bell, Whirlpool maintained its full-year financial outlook despite uncertainty over global tariffs. We heard from the CEO moments ago. And Chipotle sales had a sales miss, and that points to weakening consumer sentiment. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Well, Tesla shares rising today by more than 5%. The big news last night on the earnings call was that Elon vowed to pull back significantly from his work with the U.S. government and pay more mind to Tesla. And that seemed to assuage investors who were concerned about the car maker's worst quarter in years. We've got Ross Gerber back with us. He's president and CEO at Gerber Kawasaki Wealth and Investment Management. Got about $3.4 billion as of the end of last year under management. He joins us once again from Santa Monica. Ross, we had you on the program yesterday ahead of the earnings call. Now the call is done. You set this threads yesterday that said, ahead of the call, that said this is the worst performance in Tesla's history. Elon will tell everyone about the trillions of TAM and robots taking over the world. Anything to get you not to look at the facts. As Elon darts off to XAI after he announces he's leaving Doge, Tesla's in bad shape. I'll just leave it there. I'm not going to read the whole thing.
I think I said it was a hot mess or something like that.
Something like that. Let's just say that. We'll keep it at that. Do you, now that the call happened, do you stand by that? Did he manage, in your view, to move people's attention away from the cars?
I'm surprised people aren't like, how did you know? How did you know? And I was like, well, because he's a special government employee. He has to leave by May. It's not like he's doing some gift to anybody. He actually has to leave the government by May. But I think this perception that somehow Elon's going to come back to Tesla and be working at Tesla more is a false perception, because I'm also involved with XAI and I'm an investor in XAI, so I know exactly what's going on there. And they just merged with Twitter, and now they're raising even more capital to even get bigger to compete with Chat and all the other LLMs, and that's his main focus, and that's what he really cares about. So I think, it's nice what he says, but it's what he does that will ultimately matter.
Well, and we love talking to you, and we have for a few years now. And we always remind, and I always go here, that you're not only just an investor in the company or various Elon properties, but you have owned Teslas.
He's got a Cybertruck.
Multiple.
I have a Cybertruck.
You got a Cybertruck, but
I drive a Cybertruck.
But
he still drives a Cybertruck.
But it's not so easy to drive a Cybertruck, is it? Anymore.
I drive it right down the middle of Woke Avenue, you know what I mean? Which is where I live. And, fortunately, everybody else has a Tesla, so it's kind of hard to yell at a guy in a Cybertruck from your Tesla, right?
Yeah.
and this is probably the biggest issue that I have, is I feel like Tesla is not Elon's company. It's a public company that's owned 87% by the public, not Elon. And now the perception going from being this climate friendly, changing the world for a better place company to being associated with Elon Musk and Donald Trump is really one of the saddest things that I can imagine for Tesla's brand. So I kind of am like fighting back from that, because I'm like, no, I drive an environmentally friendly truck and you're yelling at me from a Ford F-150, and Henry Ford was an actual Nazi. So I'm like, this is really odd that an oil-loving Nazi-driving car guy is flicking me off, you know?
Do you like the Cybertruck? There's a lot of reports online about parts falling off, though I have read a lot about how people love it. Hannah Elliott loved driving it around last year. Do you like it?
You know, and this is, Tesla should be paying me to do ads for the Cybertruck, because I actually love the Cybertruck. The Cybertruck saved my life during the Palisades fire. I can give you 5 reasons why you should have a Cybertruck. And I can also tell you 5 things that are disappointing about the Cybertruck that could have been better or could be better in new versions of it to make the car sell better. You know, so I know the truck in and out, and part of the performance on the manufacturing side is very disappointing. I have not had those problems personally. My truck has been solid. You know, I let some kid drive it. He crashed it. They fixed it quickly. You know, the car has been great. The car has been great, but I can't tell you how important it was to my survival, actually, during one of the hardest periods of time of my life.
Is it because of the air filtration? Like, what?
Yes.
How did you use it?
Wow.
Yeah. The air filtration is what saved my life, because I was in the middle of the fire and I couldn't breathe. And so I was trying to fight the fire like an idiot. And this was before the firemen came and saved me. And it was so smoky that I had an N95 mask that I was like dying. And so I would like jump into the truck, and I had the HEPA filter thing running, and it works, you know?
Yeah.
And so I could breathe, and then I would jump out of the truck and then like try to deal with fire. And then I could only deal with that for so long before I have to get back in. The other thing about the truck, you know, was the tonneau. You know, it's a hard tonneau. So when I put all my stuff, I was living out of my truck for 2 months, and it locks. And this is a really nice thing where most pickup trucks don't have a way to cover and lock everything in your bed. And so I was able to basically keep all of my important belongings safe in this truck. And one of the things that happened after the fire was looters were attacking people's cars, knowing that they had all their stuff in it. And a lot of people got stuff stolen out of their cars even after they dealt with the fire, which has sucked, you know, and that was not a problem I had. So, you know, there are many things about this truck that are great, and the story just isn't being told.
Are you okay? Your family, your loved ones okay? Now? Yeah.
My family's great. I'm not okay, I guess is the best way to put it. I've moved back into my house. I'm one of the few people that survived this fire. The fire ended 2 blocks from my house where I fought it, and the firemen ultimately stopped it. And so my neighborhood's, you know, normal, except nobody lives there yet except for me. You know, I was able to fix my house pretty quickly, and I felt it was best for me and my family to move back as quickly as possible. And that's been true, you know, but I live a very surreal life, you know, right next to the edge of hell, and I see it every day, and it sucks. And you know, for me, I'm mostly suffering from, you know, some level of depression and you know, PTSD from the event itself, which was really traumatic. Like, I don't recommend fighting fighters.
We can only imagine, and we from afar watching, you know, certainly felt it, but I can't even imagine seeing it firsthand.
But I'm doing better, you know, I'm doing better.
Good.
You know.
Good.
It's hard to see it every day, though, you know.
Yeah.
It's hard.
No easy turn, and I want to go back to something that really struck me, and we wish you well. You know that.
No, I'm good. I'm good.
Okay,
I'm best off compared to so many other people. So
I know, but still, you know, life keeps throwing us challenges, and some are tougher than others.
Sure. Everybody has them.
Well, speaking of challenges, and forgive me for this segue, but one of the things that struck me, you know, we've been lucky to talk with you. This is, you know, our second time in the last 24 hours, and one of the things that continue to kind of, Tim and I want to know more and more, and you really shed some great color, and I want to share it with our audience who are watching and listening right now, who may have missed it yesterday, of what you had to say about what's going on in terms of EVs in China. I think we don't have any concept of how sophisticated, how good they are getting on stuff like EVs and other things. Did we lose you?
I'm here.
Oh, are you there? Okay. So what's
I thought you were going to play a clip.
Oh, no.
Oh.
No, we want your...
Ross is a pro. He's a pro. He's like, there's a clip coming right now.
I don't know.
No, it wasn't good. No, I want to go back there in terms of what you were seeing, what you're hearing.
Well, talk about it again. Well, once again, I haven't been to China. I only know because I follow all the car companies in China. And there's a big misperception about China, I think, and you saw it a little bit with the trade negotiations, like they're somehow behind us in technology and like we're holding back our technology from them, and that will slow them down. That is a wildly incorrect way to look at China. If we hold our technology back from China, what happens is they develop even better technology because we force them to, in a way, and they're extremely determined, intelligent people who will work extremely hard to achieve whatever goal they need to achieve. And so when Tesla came to China, Tesla was the first company in China said, you can have 100% ownership of the factory, come here with open arms. And we had never really seen that before with companies where China always made them do a JV where they would own half the company kind of thing. And so the part of that strategy was to send a whole new generation of Chinese workers to work for Tesla to learn how to do stuff. Mm-hmm. And they have. And so you have Chinese entrepreneurialism, which is pretty good for a communist country. And then you add in know-how and government support, and you get a pretty potent way to develop pretty good vehicles. And that's what they've done. And so China's built a whole new infrastructure around electric vehicles, which was actually my dream for the United States.
So that raises the question, Ross, since China's EVs are so good, and those are not available here in the U.S., should investors really think about the U.S. being the only market for Tesla because it can't compete outside of the U.S.?
Well, no. Tesla can compete anywhere.
Can it compete on price? Can it compete on quality?
It can. Once again, if Tesla had a focused CEO who wanted to beat the Chinese competition, they could have released that Cybercab as a Model 2 with a steering wheel on it and made that thing for $25,000. Like, people would buy it. It would be really successful. The problem with Tesla is they don't want to sell cars anymore. It's fairly obvious. In fact, they work really hard to convince people not to buy their cars. Mm-hmm. I mean, it's like the CEO every day talks people out of the products. So the real issue to me is, if you don't really want to sell cars and you want to sell cab rides instead or robots, boy, that's going to be a long time till it makes $100 billion in revenue. You know what I mean?
Yeah.
So the Chinese are like, okay, we're fine with this, and Tesla's falling behind, and they're attacking everywhere they can. The Europeans and the United States have a lot of trade barriers against these Chinese vehicles because they're inexpensive and they sell very well. And I was in Mexico City, all you see are BYDs. They can't afford a Tesla,
Yeah.
And so I think quality, Europe and the United States, more Europe has always won on quality of vehicles. Like design and interior style and things like that, where China seems to be behind on that. But when it comes to technology, China seems to be well ahead.
All right, 30 seconds left here just to wrap up, Ross. Elon gets into your cyber truck, not exactly car karaoke, but you guys have a conversation.
They know each other. Elon has responded to Ross. I've seen the tweets.
Yeah, he knows me.
Ross is an investor in XAI.
I know he knows you. So what's the 30-second question you ask him?
Why do you think he said he's coming back to Tesla? Because he knows I've been saying it every day for like months.
So that's what you ask him?
What would I say to Elon?
Yeah, 30 seconds.
The same thing I said to Elon when I first met Elon long ago, when he was tweeting a bunch of garbage and Tesla was struggling. I think it was the end of 2018. And like, I was like, dude, you got to stop tweeting this garbage. This was like 7 years ago. You know what I mean?
Yeah.
And I was like, how is this the mission? And we got to raise money and we got to save Tesla. And like, this is just not helping. And I remember him looking at me sort of like, yeah, right. Sure. You think I care what you say about my Twitter? And I was like, please, just like, I'm just saying this as nicely. And I remember, because I was standing with somebody from ARK Investments and people were pretty surprised that I confronted him about Twitter. And I was a little bit nervous because he's a big guy. And, I liked Elon at the time. And so I was trying to be nice, And of course, he didn't stop tweeting, and he raised money the next day, which we invested in Tesla at that time. And it was extremely profitable. And I would say the same thing to him today. And it's like, I don't have to agree with your opinions and your viewpoint in life, but do you have to share that with everybody all the time? It's not necessary, and it's not helping you be successful. So why share opinions that are so unpalatable to so many people when it's completely hurting you from achieving your goals? That's what I would say.
All right. Good stuff, Elon. If you're listening, we'd love to hear what you would respond to Ross. Ross, thank you so much for all of it and for being so honest and real. Ross Gerber, he's president and CEO. Stay safe, be well, of course, of Gerber Kawasaki Wealth and Investment Management out there in Santa Monica.
Let's take a look at some stocks on the move today. Joining us now is Red Brown, Bloomberg News earnings reporter. He's here in our Bloomberg Interactive Brokers studio. Red Brown, you're a busy guy. You're doing earnings, but you're taking the time to hang with us and talk about some stocks that are moving. What's on your radar?
You just like us that much, don't
We
you?
like red.
I wouldn't miss this for the world, guys.
We do like red.
What's on my mind?
Careful what you say. We're going to get you in here every day.
Glued in here. What's on my mind is, I mean, there's so much to choose from today. It's barely catch my breath, but Kimberly-Clark is somewhere we can start. I thought interesting stock. They are down 6% over the last 3 days, reported earnings yesterday morning. And I pulled this one out just because I thought their strategy with dealing with the tariff issue was quite interesting. A little bit different from some other companies we've seen who have just been saying, we don't know to the extent that we're just pulling our guidance. Kimberly-Clark kind of went the other direction saying, we're going to give you as much information that we have. So they gave an exact number on how much they think the impact from tariff is going to be to their bottom line. They said $300 million is what we're seeing. And they also kind of played out where are the pushes and pulls that they're actually going to be able to mitigate some of those costs over the next 2 years. They're saying it's going to take them to actually get through this issue. Unfortunately, the market didn't really respond well to that strategy.
Thanks for your honesty, but hey.
Yeah, exactly, right? So, it's just interesting to hear the different ways that management teams are going about revealing this information and how much they want to reveal. And it does seem like when these companies are pulling their guidance, that seems to be almost the best case scenario right now for, like, we've seen a couple of the airlines doing that and shares responding positively.
Yeah.
I'm just surprised that we're still seeing the stock move 2 days after they reported. Like, typically you'd see the moves happen in the session right after or the session on the day, depending on if they were early or late. But we saw them down for a second day today.
And that might be because of the transparency, right? Like, we know how bad it's going to be. We can continue to trade, and like, against you for that.
Yeah, you laid it out for us, so we're going to trade on it. Supermicro, it's one of your top gainers in the S&P 500 today. Quite a pop.
Yeah, Supermicro kind of leading up a whole cadre of semiconductor stocks on the China sort of, the will they, won't they with the China tariffs. Are we cutting, are we not? Right now, I guess people are taking any sort of good news they can get in that situation. Supermicro also up today, Dell, Monolithic Power, AMD, all among the top performing stocks in the S&P 500. And the reason being is all of them get double-digit amounts of their supplies from China. So if they are able to kind of claw back some of those costs, not going to be hit with triple-digit additional costs on a lot of these important inputs, that's only good news for these companies.
Just got about 30 seconds left here. Number one gainer in the S&P 500.
That's just because you love it, Carol. Well, this was on your list.
It was. It was one of my gainers today. Amphenol.
Great minds think alike.
APH. We don't talk about this a lot.
No, we were way off the beaten path here.
But it rallied.
I'm just hanging out. You guys are off the path. I'm just hanging out on the path.
At its highs up 16% today, finishing with about an 8% gain.
Yeah, it could have been the best move since 2009.
Yeah.
Still, a double-digit gainer today. So, really impressive. I think a lot of it raised its outlook. I mean, I don't think it's the only company that's done that this earnings season, but it's one of the few that I've seen. So I think, a really strong statement from management that they're going to be able to continue to grow through this period of uncertainty. I think a lot of it has to do with who their customers are. They have big customers.